Good morning, good morning. It is Tuesday, the 21st of January, which means it's my mother's birthday.
Happy birthday, Mrs. McDonald.
Happy birthday, Mrs. McDonald.
There you go, happy birthday.
And welcome back, Luke Moore.
It's been a while. We were just actually counting. I think it's been about a month since I've been in studio. I did it once for my in-laws, remotely over Christmas.
Oh, that's right, of course.
I couldn't wake anyone else up in the house. So I was kept up in a kind of in the office in the house, and I had to kind of creep around like a little mouse.
With the poster of St Andrews in the background.
Poster of St Andrews in the background.
Yeah.
Yeah, but it's good to be back. Good to be back in the studio. It's nice.
But hang on, you're going to have to tell everybody where you've been.
So
It's not a tan from Scotland.
It's definitely not a tan from Scotland. So I got married about 18 months-ish ago. So my wife and I's holiday years wouldn't align. So we had to wait for hers to refresh on the 1st of January. And we went over to Dubai for a few days and then Mauritius. So I'm very, very blessed. It was awesome.
Now, Luke and I are obviously friends on Instagram, and all I kept getting over January, the start of January, was these amazing pictures of, sunsets in the ocean and paddleboarding.
Yeah, well,
Made me sick.
You got to flaunt it, right? Well, yeah, might as well show everybody. No, I like to try and keep a bit of a running diary of what we're doing. So every kind of big holiday I've been on, I'll try and keep a bit of a running diary, because otherwise the photos just stay in your phone and you never really see them. So at least there you can make reference to them. So I was actually, we'd left my dog with my in-laws all the way through Christmas. So we actually had to drive up to York yesterday. They're from Scotland, we're from London, so we had to meet somewhere in the middle.
No way.
We met in Harrogate, so I drove back yesterday. But to that end of flicking through pictures and stories, we gave my father-in-law the play-by-play kind of day-by-day run. He just wants to know absolutely everything. So yeah, the story came in handy there.
Brilliant.
It was good, but I'm glad to be back.
Welcome back. Your feet are under the desk. We're ready to go.
Feet are under the desk.
To the brave new world.
We've upgraded. We've now got screens. There's a lot more going on in the studio.
Oh, you've not been around this? Oh, well.
There's another table. I don't know what the footstool's for just here. Who's standing on the footstool?
That's Angeline's to get up on the chair.
Okay,
no, genuinely it is.
Yeah. Sorry, I'm revealing the magic of theatre here and the magic of film. But no, it's good to be back. It's really good to be back. And what a day to be back.
What a day to be back indeed. It's a brave new world. But what have we got coming up on today's show? Luke, run us through it.
So, you've unfortunately got me for the first hour or so through the market open. Then at 8:40, we've got trade expectations. Matt Arbour, who is our head of equities and has run the Vol desk for a long time. He's going to be coming in for you. 8:58. Specifically, just before the All Sessions opening bell.
That's exactly it. We want to be live over the All Sessions, especially today.
So you've got the pleasure of Monty coming in, and Monty's been doing some fantastic work for a long time around sentiment analysis and risk, so that's going to be really interesting. And then Tom, work from home, Wolstenholme, 9:45, he's coming in for the confirm and send and to close you out for the day. So yeah, busy show, packed show.
Now we can add to that Luke Moore doesn't know what's about to hit him with fast markets. That's right, it's the new segment where we hear from you with the stocks that you want to hear our view on, whether I've got the position on. Maybe you give me a position that I will put on. And yeah, we're going to hit you with that about 8:10 this morning, 8:15 maybe.
Cool. I've been briefed by Ronnie.
Oh.
He just said, right, be prepared. I'm still not quite clear, so we're gonna have to figure it out. So you're gonna learn as I am. So let's. This is gonna be fun. It should be good.
We call him Demo now.
Demo.
It's not Ronnie.
Demo?
It's not Ronaldo. It's Demo.
Why demo?
But it's a long story.
Okay.
We'll let the viewers run you through it.
Okay, fine. Sorry, I've got to bring myself up to speed. I've just shown my hand that I haven't stayed in touch with the show.
I was very unfair on Luke Cooper yesterday. So every time the US market is closed, I phone up the desk, put on a terrible accent, and I try and get Luke Cooper to go to the traders to ask a price in US stocks. So yesterday, Sam Peach and I got together and we said, right, what can we trick him on? Because he's up with it now. I got him first of all with Boeing, but he picked me up on the last one. So we went for Manchester United, and I phoned up pretending to be Gary Neville, and I had some Man United. I want to fluster him a bit.
Yeah.
And he went for it. He told me that 80,000 shares had traded, but then he picked up at it and he told me that it's closed.
You can imagine you've gone proper Gary Neville.
Yeah, I went.
Just not good enough.
Yeah. And I kept on talking about Sir Alex.
Yeah.
Sir Alex.
Yeah.
Right. Okay. So with that, let's go into some overnight action. Good to see you guys already on the chat. Parth already asking, what is our view on oil? Well, that takes us into these overnight executive orders.
Yeah. Have you seen that picture of him from the pictures on the FT of him just sat at his desk in the Oval Office, and he's probably got about 40. Yeah, there's a different article to that one.
Even more, but there's
you go. So you've got
15 of them.
You've got all the post-it notes on them. So which one's he signing? So do you remember Polymarket?
Yes.
The kind of predictions market. So when I looked last night, the pricing is that he's going to sign over 45 by the end of the week.
Oh, by the end of the week, that is.
So he says by week one, the market. So maybe it's 1 week. So whether it's 7 days after today or yesterday, maybe worth checking.
I'd be a buyer there.
I'd probably be a buyer. Yeah, so the Telegraph was reporting about 150.
Yeah.
So the FT speculated it was going to be over 200 in the first week. So I've got a bet with a client. I made him a 140, 160 spread just to see.
But Polymarket's making
45.
Well, there's a great arb there, isn't there?
Yeah, so I'm way out of the money at the moment.
Yeah, I was going to say you're in
before
trouble.
I knew about Polymarket.
Yeah.
So we'll see.
And he did know about Polymarket.
Well, let's see. So look, let's just run through what he's done overnight. So the initial moves from yesterday was dollar weakness, because in his first two speeches there was no mention of tariffs. So the dollar came off. The crowded trade of euro dollar rallied hard. So everybody's been shorting euro since before Christmas. That was kind of the trade that we think.
Should we get euro? Which one would you like me to get up? Euro dollar or?
Let's do euro dollar first.
Okay, dokie. Where is it? There. Right. So this is euro dollar over. The last 2 weeks. But if we want to look at it intraday, over the 2 minutes, we can see where he started talking a little bit more nasty, but you see there yesterday about 130.
Yeah, so that's when he didn't mention tariffs in his first speech. So we got that kind of dollar. The dollar came off a little bit, and everybody that's been crowded short euro dollar, I think that was what that move was. It was quite sharp. Then overnight around 1 in the morning, and I actually quite find how candid and how casual he is. So he's in the Oval Office, he's signing that pile of executive orders that you see, and someone just says, "What do you think about these tariffs?" And he just goes, "Oh yeah, we're thinking probably 25% on Mexico and Canada." That's what we're going to do.
Just business as.
Yeah, he's like, "Look, there are too many immigrants, too many whatever's coming in, they're stealing our jobs, whatever you want to call it. We're probably thinking 25%.
Yeah, and a national emergency at the border.
National emergency at the border, yeah. So Canada and Mexico are going to be vulnerable, I think, from a trader's perspective. But that was what gave the dollar its strength back. So the tariffs, 25%. We finally had a number. He said he thinks by the end of the month. So February 1st is where the markets have currently lined up their expectation that tariffs will come. When you look at other tariffs as well, there's nothing yet on China.
Yeah, well, let's just have a quick look at the Canadian there. So you can see the exact inverse, obviously, of the euro because it's the other way around. And yeah, bang on 12:48 in the morning for us. You had that adverse. Now, the S&P reacted badly as well, didn't it? The S&P had a real sell-off there.
Yeah, it did the inverse. That to me is the dollar strength coming back into the market, because if you zoom back out a little bit, you can see the rally that the futures had. Of course, the cash market was closed yesterday. You can see that corresponding with about one o'clock rally, and then it giving it all back.
So we literally, if you're wondering where we sit with regards to Friday night's close, we're flat. We're about 10 basis points higher on the S&P futures.
Yeah. Bear in mind, we've had no underlying cash trade. So that's all futures, all speculative. We'll see where it all opens.
Yeah.
We've got to keep an eye on that.
It's going to be an interesting day, isn't it?
Yeah, it certainly will. I mean, to answer the question about oil, let's look at that next. Drill, baby, drill.
Indeed.
Is what he's looking at. In terms of executive orders that I've seen, he has lifted the freeze on liquefied natural gas exports. Mm-hmm. So that's the only one I've seen in terms of kind of energy, but I think we are expecting that we're going to see a big focus on domestic energy. So the stocks that are exposed to there, I would expect to see.
And remove limitations on oil drilling in Alaska to boost domestic production. He's done that already as well. And of course, withdrawal from Paris Climate
Accord. He's also withdrawn from the World Health Organization.
Right. Still in NATO though.
Still in NATO for now. Revoked the electric vehicle mandate, which I don't actually. Do you know much about that? Because I thought
it's just a target.
Fine. Okay.
Yeah.
Okay.
Yeah. It's just to reach 50% of electrical vehicles by a certain date. So it's meaningless.
Okay. I would have just thought, because any kind of EV headlines while he had Musk sat behind him in row one would have been interesting. But
yeah,
that makes sense.
And then Zuckerberg also.
Zuckerberg. Yeah, it was a good day for.
Do you see him get caught?
Yeah, I did see him get caught.
Zuckerberg and Bezos might have a few words.
A little bit of beef.
Yes.
Yeah. Enough said.
The future Mrs. Bezos. Mark Zuckerberg was very interested in chatting to her.
Yeah, I think he was. Yeah.
So away from the numbers, saying have a look at the DAX intraday, and you'll get a similar kind of picture. So let's add that, because we did have a long conversation yesterday on there. We do have clients short of the DAX. It's in the top 100 traders' favorite position.
The DAX is going to be interesting. I think it's going to be in play. And I think it's going to be in play because it's probably the most exposed to what Trump is talking about.
Yeah.
So equipment exports into the US, car imports into the exports into the US. Two of the top 5 constituent stocks are Porsche and Daimler. No, Mercedes-Benz.
Yeah.
Mercedes-Benz, 2 of the top 5, and then in there also you've got Siemens, which is an equipment maker. So you've got 3 of the top 5 are kind of at risk. It also, I looked
probably
back,
Bayer as well, I would imagine, with Monsanto.
Yeah, maybe. But they also had, if you look at the global markets back in 2018. So was it 2017? No, it was 2018. He got inaugurated.
17.
17 was the inauguration.
18 was the crash.
Yes.
In the January.
Yeah, but did he get inaugurated in 17?
Yeah, January 2017. Yeah.
Yeah. Okay, fine. So it's Goldman said that they had one of the worst. If you look at the kind of main indices, had one of the worst 5-day return profiles post inauguration.
Well, funny you say that, because my new favorite present is the 2025 Stock Traders Almanac. It popped into the letterbox yesterday. This thing is the Bible of stock markets. You can't see too much there, but basically for every single page, it's got the percentage probability of the S&P, Dow and NASDAQ going higher, lower, and it's absolutely incredible. It's by far and away my favourite book.
Yeah, it's ace. That was it got a lot of love. Originally, it was the author's, I can't remember the exact name. The chap who runs it now is the son of the founder.
Okay.
And it was the founder that coined the phrase "the Santa Rally."
Really?
That's where it came from. Yeah.
Oh, brilliant. And it's Jeffrey Hirsch.
Yes. So his dad.
Stanley Hirsch, it sounds like a kind of. But yeah, so Tuesday the 21st, we have a 57% chance. Looking at the last 23 years, on the 21st, we got a 57% chance of the S&P going higher. Only a 43% chance of the NASDAQ going higher.
Yeah, but that's just a marginal coin flip, isn't it?
That's
23 years.
We actually, Thursday's the big one. Thursday is a 66% chance of the S&P going higher.
I'd love to know how that looks against the daily options settling on those days through Tasty. What the expected moves look like, what the range of that could potentially be.
Yeah, and if it has any influence at all. Because, of course, there are so many algorithms now, there's so many quant programs that all these stats are embedded in a lot of coding. So they can be self-fulfilling, right?
Definitely.
Or does it go up on Wednesday afternoon because people now expect it to go up on Thursday? So. Right, good morning to you all. Who do we have on the chat? We've got Carlo in the house. Gavin Ackers has been in there from the start. R6 Senna, thank you very much for your question yesterday. We're going to try and get to that today. Away from the numbers, VW must be squeaking. They are seeking subsidies from the US for EVs. Bigger Biaz. Bigger Biaz, welcome. We've got a new comment here, I believe. Having worked in oil and gas in the USA, there's a level of profitability where exploration and drilling based on the cost of a barrel of oil. Existing wells, $38, and for new wells, $62. And that's what makes it just the whole working out the demand supply equilibrium. I love how self-correcting it is.
Yeah.
Because obviously, exactly as you point out, new well, you've got to have a $62 barrel of oil. Now, looking at oil price, right enough, every time it gets down to 60, the low 60s, then there's a lot of support there. So
Trump did also say that he's gonna fill up the strategic reserve right to the very top.
With Bitcoins?
No, with oil. With oil. I think a lot of people are speculating that you're going to get news on the Bitcoin strategic reserve. So that's probably going to be one to keeping an eye on. The Bitcoin bulls certainly are looking for that. But yeah, oil's been a beneficiary in the last week of last year and so far since the start of this year. Interestingly, was down yesterday, fairly flat today. 76.50 is where it's looking to open.
The biggest beneficiary overnight, Luke Moore.
The biggest beneficiary overnight. Is this the first pop quiz fast markets? I'm going to say. Well, the dollar, surely? No?
Gold. Up 87 basis points this morning. 2730, 2,730. You can see it's creeping back up there. We're now above the recent highs from November. And to see us higher, you got to go back into, well, the end of October, start of November. So actually on the election day, is the next target there, 2,746. Do we see that today? Do we see new highs in February?
My short puts certainly hope so.
Short puts?
Shorts and puts, yeah.
I've short puts and long a bundle of calls because I think this goes to 3,000.
Yeah.
So
it's if you're looking at kind of the global geopolitical risk scenario, he's certainly going to start throwing his weight around again, as he is expected. He's already said that he's going to be a peacemaker. In his kind of candid, let's sign papers on my desk situation, someone asked him about the conflict, and he just said, well, it's their war, not ours.
Yeah.
Now that we're getting all of our prisoners back, all the hostages back, it's their war. The other side looks like it hasn't got much money left, but it's their war. So I wonder how that all plays in. I remember working through the first Trump presidency, and everything would just move on a tweet. everything would move on a tweet. I don't know whether that will come back now. Actually, that would be certainly interesting.
It's true, isn't it? Is you had to have, and it'd be a great advertisement for Elon again.
Yeah.
But then is what was it? Social. What's the Donald Trump's?
Well, DJT was Truth Social, isn't it?
Truth Social.
Truth
yeah.
Social.
Is that? Are they just going to merge?
I don't know whether that might be an interesting one. Well, also, did you see his Trump meme coin? Did you see that? And did you see who rug pulled it?
Yeah, even better.
Did you see Melania put her coin
We're saying to see Melania suck all the liquidity out of Donald Trump coin was just it was incredible.
It was incredible. Also, I just like the fact that when he came on stage and he went to give her a kiss, her hat was too big. And
is that what happened?
Kind of like had to duck under, and in the end, you could just see she just went, no. Don't ruin the look.
We did notice that Melania was looking very professional.
She did look very, very professional.
That was a great. Now, Trump coin now down 40%. I got to say, I called it on my TikTok. I says this thing peaks, and that's it.
Yeah.
$36 it is now. What an absolute joke.
And what's Melania coin doing? Because if that's up, that's just incredible.
We assumed it wasn't even real. Surely it can't be from her.
Coin market cap is showing it down 70%.
Right, okay.
Yeah, so it may not. It probably isn't from her.
Thank goodness the world has come to its senses. Now, yeah, thank you, Big Beers, for that. Keep an eye on US rig counts, absolutely.
Yeah, good job.
So yeah, we're back to, but I still don't understand why oil's up at 76.5. You know, the potential volume uplift, well, it's just back to plain demand and supply, isn't it? Surely.
Yeah, you'd expect so. Well, I suppose what will happen is it depends on the OPEC response. They've already delayed cuts several times over.
Yeah.
So we'll see what they do. But yeah, you would normally expect a rush of volume to the market, drain supply.
Yeah, I mean, okay, maybe it's not a rush. Maybe it's just got to come on. But further out in the calendar, you would expect some. Yeah, so we've got Andrew McKelvey. Don't think that I missed your original comment on Shoe. Is Shoe going to get a kicking today following their results?
Shoe, can't say it was on my shopping list to take a look at, but we can have a little look at it.
This must be Shoe Zone, is it?
Must be Shoe Zone, yeah. Getting a kicking, very good, Andrew McKelvey.
Yes, they are. Final results out.
We have got some UK news. Should we go through to crank into it, or?
Yeah, go for it.
Yeah. Okay. Cool. Premier Foods, I think, is probably one of the bigger ones today. Premier Foods, Kia Group, and Aberdeen. Premier Foods, we're going to keep an eye on at the open. They've seen their profit at the upper end of their full year 2025 expectations.
Nice.
Good for them, sales up 3%, total grocery sales up 2%, and their CEO's talking, volumes are very good, very good, volume-led branded revenue growth at the top end of market, which is very good from them. Aberdeen, their assets under management is up 3%, so to 511 billion. They've said there's a 1% increase specifically.
Is this year on year? Sorry.
This will be year on year, 3% uplift, 1% uplift in Q4.
But the market, surely they make more than that. As in if you've got 100 million assets under management and the market goes up 20%, then you're up 20%.
Well, the actual specific reading is AUMA, assets under management.
Okay.
A, what's the A?
Maybe it's like organic.
Maybe.
Or like for like kind of thing.
Potentially. Yeah, so they've said that actually they've seen decent inflow in their quantitative strategies and liquidity funds. Institutional and retail wealth returned to a net inflow. So Aberdeen has seen money go in. Kia Group could be one to keep an eye on. Mm-hmm. They've said that all their numbers are in line. They've announced a £20 million share buyback. So the markets usually like those.
Right.
And they've stated that they believe that as a strategic supplier to key areas of the new government's priorities, including transport, education, healthcare, justice, defence and nuclear, they believe there are growth opportunities for us in the medium term. So good news over at Kia Group. So let's keep an eye on those four for today. Those three.
Well, we got some exciting upgrades and downgrades out there as well. Who's got next? Who is in next? We had, now, one of you was arguing for next to be up on numbers. It has since come back. Well, I've got some good news for you. It's been upgraded today at Morgan Stanley to overweight with 108 price target. So £108 price target. So next will be up on the open on the back of that. Pearson has been downgraded to equal weight. So I know that's one that we spoke about on Fast Markets last week. Pearson downgraded to equal weight after numbers. That's at Morgan Stanley as well. And Sainsbury's downgraded to underweight. Now that's one that really grabbed my attention because, right, let's have a look at next there, guys, please. Thank you. So there's next. That price target is up 108. Yeah, up here. So what's that, 15%, 14% upside in next. But let's have a look at Sainsbury's.
Well, that Sainsbury's one might be interesting because I saw last week Ocado was getting a lot of love. So I wonder whether there's just some sector rotation in their coverage. I'm just going to look at Ocado while you're doing that.
And the problem is it downgrades to underweight, but then the price target is higher than where it is. That's always annoying. You can earn, Morgan Stanley saying you can earn more in the bank in a savings account than you can being invested in Sainsbury's. So, we're also, Apple downgraded. Bigger Bias, let's see where that is. Apple downgraded. I haven't seen that one this morning. Please let us know where that is. That's really interesting.
Well, I did see with Apple, their iPhone sales in China was down 18% last quarter. So that could be as a result of that.
Right.
So that's a headline.
And that was the other day that news was out.
Was it? Okay. I just saw it.
Yeah, just excellent. Right. Quick break. We'll be back for the opening bell very shortly.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG the home of the ambitious.
Welcome back to the opening bell on this Tuesday, the
21st of January, my
21st of
mother's
January.
birthday.
Mother's birthday. Yes, welcome back. One of the things we didn't cover off just before we cut there for a break was the UK jobs data that was released at 7 a.m. this morning. So between September and November, we had a wages excluding bonuses rose 5.6% when the market was looking for 5.5%. So there is some potentially inflationary jobs data coming through there. The other ones that we have here, one I can get my screen up, was the unemployment rate came in a little bit higher than expected, 4.4%.
Yeah.
Instead of 4.3.
So that's back to the highs of May last year. So not new highs, but we are back to the highs. So yeah, a little bit negative on the sterling there.
Yeah.
But right, pre-market prices. We're next looking up 2%. 2% in next. And then, thank you, Bigger Biaz, Jeffries, it is that have downgraded Apple. So $200 price target now from $212. Luke mentioned about the China sales. We think those were overnight.
Yeah, overnight, 18% down in the holiday quarter just gone. So that'll be one to keep an eye on the pre-markets when they open up. Premier Foods, we said that there's some news on those guys. They're indicating up 5% so far in the auction. The other one we were looking at was Kia.
Right, I'm going to count you in 5 seconds, so get that bell in your hand.
Kia Group.
Luke Moore back in town to launch the London Stock Exchange. Opening it goes. Very good. Back to ringing a bell properly.
There you go. So, what do we have open?
Right, they're taking a bit of a slow opening today.
There we go.
Sleepy open.
Next has opened at £95. So that is up 1.2%. Kia Group has opened at 145. That's up 3.3.
Right, Lloyd's, sorry to interrupt. Lloyd's is up on the FT reporting that the Chancellor, through the Treasury, is applying to intervene in the Supreme Court motor finance hearing. So Lloyd's is flying. Why is that not coming up? There it is. Aberdeen up 4.
Aberdeen up 4. Tied into that motor finance story, then Close Brothers are probably more exposed than anyone else. They're up 7.5, not out of auction yet. They're indicating £2.63.
So yeah, so it's Close Brothers, Lloyd's. Who else was involved?
They were the two major trading ones, but that's going to be dragging up the rest of the UK banks, one would imagine. No, in fact, NatWest is arguably flat on the day, trading at, if I can click them up.
Yeah, it was mainly Lloyd's, wasn't it?
It was, yeah, but Barclays up 1%.
So will that be a breakout? No, not quite. Breakout, we would need 62 pence for Lloyd's. Actually, if we go up to the top of it's more like, say, 64. So 64 pence we'd be looking for a breakout on Lloyd's. It's at 61 at the moment. But yeah, just to run over that story again, it is that the FT reports that the Chancellor, through the Treasury, is applying to intervene in the Supreme Court motor finance hearing in April 24. Still a few months to wait, aren't we?
Yes, but good news nonetheless for Lloyd's. So they're actually giving a tiny bit back now, just trading up 4% off its highs. So it's giving back about half a penny. So that's one to keep an eye on. Where else did we have news? Kia Group have are continuing to be strong on the back of the news of that share buyback, 5.7% up, trading £1.45. Shall we have a look at the kind of oil companies? Because if we're talking about the price of oil, we're talking about Trump, we need to look at our international oilers that are based here. Shell are flat on the day, down smalls, 0.1%. So nothing really going on over at Shell.
Okay.
And British Petroleum also flat. So not
right. So flat on the names. BT. BT's down 1% on a downgrade out there. So BT downgraded to an underperform. Anglo's has been cut at SBG Securities. So that's Standard Bank Group. SBG Securities cut Anglo's, increase Rio Tinto. So yeah,
Anglo's are trading down 1.4 on the back of that, 25.82.
Oh.
25.82.
Might take advantage of that. We've got, and then finally, Daily Telegraph are pushing Alibaba. The Times are pushing Microsoft in their tips sections. So Diageo also down 1.5%.
Let's have a look. DGE.
Week there, isn't it?
What, finally people getting annoyed at the share price that you can't get hold of Guinness?
Yeah.
24 pounds. Yeah, it may have. You bring up the chart on that. I don't know whether that might have just broken a round figure, but 24 pounds. It's kind of struggling a little bit.
I think it is. It has been lower, but not by much. 23.50 the lows there. Yeah, it's really. It got well. Did you? So the US are thinking about putting.
Tariffs on importers or exporters.
I know, warnings on labels of the cancerogenic traits of alcohol.
Damn. I don't want to know.
I don't think it's going to affect, but maybe I'll drink more Guinness Zero on the back of that. Now, what is happening in Europe, Luke Moore? We've got ASML up at the 748. So, yeah, let's get those positive moves up there.
Well, I think the obvious ones to be expecting a move are the car manufacturers, as we mentioned before the show, before the bell. So how are they performing on the downside? Renault, Stellantis, Volkswagen, BMW, Mercedes-Benz, Porsche, and then your shout, Bayer. Wow, there you go.
All getting a bit of a spanking. So where does that leave the DAX with our top 100 traders in the short DAX position? Where are we this morning? We are down 28 basis points. It's not giving you that much, is it?
Not giving you that much.
It's not quite. If you... sorry, producer Fred. The French cars are terrible. Producer Fred says, sorry, the share price is terrible. That is... I did buy him a croissant this morning.
Oh, right, okay, cool.
He said, where is it from? I said, oh, that French restaurant. Which French restaurant? Oh, the Pret-a-Manger?
Pret-a-Manger, yeah. Although the almond croissants are quite nice, I'll give them.
It was sitting next to an almond croissant, so he did ask why it smelt of...
essence of almond.
Yeah.
Yeah, no, they are quite nice, I'll give it that.
Right, retail world, how's Next doing, Luke Moore?
Next are coming back a little bit, 0.6% up now, trading 94.26.
I thought they'd be up a bit more than that.
Yeah, they've come back a little bit.
Close Brothers are open, 14% up.
Close Brothers, wow, there you go. They're going to be flying. How does that look technically on the chart? Because is this a relief more than anything else?
Let's get this up. So that was from, what, about 4 months ago, was it? Yeah, so they were 362 before this, or was that the news back there? Was it in September? Is that as far back as that? We'll have a look at Lloyd's to work that out.
Yeah.
Late October, right. So it was, 360.
Well, look, don't call it a breakout, but look at that move that we're seeing above the mid-December high. Don't call it a comeback.
What's that from?
I can't remember. It's just in my head. Don't call it a comeback.
Oh, away from the numbers, music to my ears. Saying Vodafone testing the 70 pence level. The best performer in the FTSE in 2025. Speaking future terms, we've got, wow, Aberdeen up 8% now.
Well, I was trying to find what's the ticker for it? ABR.
Well, as long as it's not got any vowels in it.
Yeah,
just BRDN is the ticker, maybe.
I'm trying to find it on the exchange, but yeah, I mean, they come out with it. So that, let me see if I can dive into those numbers just a little bit more for you, because we gave you the AUMA figures while we tried to figure out what it was. So more specifically, AUMA up 3% in 2024 to 511 billion, with a 1% increase in Q4, reflecting positive markets and a net inflow. So we saw that here as well. You know, Q4 post-Trump was positive in terms of client activity. We all saw that volatility increase, not surprised. Their retail brand is Interactive Investors, a competitor of ours for our physical cash product. So net inflows over there. They've said that that inflows were driven by alternatives, quantitative strategies, and liquidity strategies. Don't know what a liquidity strategy is. institutional and retail wealth turned to a net inflow of 300 million compared to a lot more than that as a reduction the year before. So yeah, good for them. Good for them in terms of the UK kind of investor space. We need some love over here.
So Lloyd's holding that up 4%, along with Barclays now up 1.4.
Barclays at 1.4. ABDN is the ticker for Aberdeen. Yeah, Aberdeen. 8.1% now it's up, trading 153. How's my SMTs getting on? Scottish Mortgage.
Scottish Mortgage.
Flat as a pancake.
That's a pancake.
Flat as a pancake, not interested.
69.80 on Vodafone there. 69.80, well, 82 to 88. But yeah, the Germans are RWE down 2.6. Now, the thing you sent me, the article yesterday on Zero Hedge, we can come back to Vision for this one. That was really interesting because at the bottom, Goldman suggested a put spread.
Yeah, they did.
On the DAX.
They were saying that the DAX, because of its exposure to, and they've said here, so with the DAX expected to be exposed to the worst of the trade tariffs, specifically the basket of, because the DAX is overweight automobiles and it's overweight electrical equipment names, they are trying to sell that. They want to do a put spread where your maximum loss is the net premium spent, and they believe it's to be held over the next 3 months, whilst a lot of the impact and the kind of
So let's get this up on screen, guys. So the DAX options on the IG platform, the suggested trade from Goldman Sachs was buying the 98% puts, right? So that's about 400 points lower. So the 206s. You would pay about 1.5% for it, just under 1.5%, and selling the 93%. So that's about 196s. So you'd receive
100 back. So what's that? 293, 115, cost you net 170.
So 170. So about 90 basis points for 5% of downside.
Yeah. Not bad for 3 months.
Yeah.
I think what they're specifically saying is the impact on pricing on a headline basis, because it's such a short-term play, is potentially going to be more impactful than actually what it shakes out to be, because he'll talk tough and then maybe under-deliver, because it's all about the art of the deal, you know?
The art of the deal, indeed.
So he's already said that, you know, the way that they avoid these is buy our oil, buy our energy. So that will be part of the deal, no doubt.
And so, yeah, so that is... I thought it was interesting. That was the kind of olive branch to Europe, was buy our, what oil was it?
It was just buy our energy, I saw.
No, it was a specific type of oil.
Well, they've got fracking.
Not olive oil. Yeah, it was buy our oil and we won't punish you.
Yeah.
But to China, one of the reasons that I think Hang Seng was up overnight, and one of the reasons the currency has been strong, is that he's actually tying Chinese tariffs to TikTok. So he's saying, right, within 75 days, TikTok will become 50% owned by a US person. And that is dependent on the tariffs.
Well, did you see that the CEO of TikTok was sat behind him?
Really, Xu.
Reported by the FT, I believe. He was sat kind of... Obviously, he's been in the US negotiating to try and figure out what's going on with the actual brand itself. He was sat...
Well, no, he lives in the US. His wife's American, his kids are American.
Oh, well, there you go.
He's from Singapore, and the Senate committee absolutely rinsed him and said, "Are you a member of the Chinese Communist Party?" He says, "I'm from Singapore." "No, I'm not."
Yeah.
And they said, "Are you a Chinese citizen?" "I'm from Singapore, Senator." It's real comical, but of course the important thing was TikTok, the sentiment on TikTok has really gone against this decision, and they're all posting in defense of the CEO.
Right.
And they're kind of making out how stupid the senators are when they're questioning this guy.
Well, I'll tell you, I was looking the other day. Do you know what's been the most popular app on the App Store over the past week?
Is it Red Note?
It's Red Note. Yeah. Have you discussed that on the show already?
I haven't changed. No.
So Red Note is a domestically kind of Chinese social network, and I get we're off topic a little bit, but it's a domestically social media.
Can
site.
you trade it? People are asking.
No, you can't trade it, but it's designed for people to share recipes and homework, and it's a very kind of nice community. And there's just been this huge influx of Americans onto the app, and it's become quite a nice community because it's a domestically Chinese app.
Yeah.
It is in Chinese, so you've now got Chinese people doing English homework, sharing notes with Americans that are now doing their homework for them.
Oh, wow.
And then in return, they're offering up math homework, and they're trying to do all this kind of stuff. So it's become it sounds like quite a nice little community.
But a little bit like that one during COVID that we all went onto, then we realised it was actually a Chinese spy app.
Oh, probably, yeah. Was that the face merging one?
Yeah, it was. You went on and you could. It was before Zoom. Zoom took off after this thing, but this thing, they were straight on the pulse.
I remember there was one where you could upload your face. It was like a very early AI tool.
Yeah.
And you could then be like a 60s footballer, or you could be like whatever. And that was just a complete backdoor.
I've got my picture with Wayne Lineker in Ibiza, and it's Wayne Lineker, and then it's 60-year-old me, and we look like brothers. It's horrific. But yeah, our in-house expert on social media and Red Note and everything else is Caleb, and he is in the gallery today. So thankfully we've got Caleb because he's also a podcast real expert. So when it comes to
Talking shop,
exactly, which is returning to the screens. We've had a few complaints asking where it is.
Yeah, I've got to say it's not been our finest hour. I'm going to say it's because I was away.
That's what everybody assumed.
Christmas delays, and the day I got back was going to be a filming day or a listing day last week.
Bit harsh.
So we are recording on Friday. This is going to be the next episode.
So when will that be back out to everybody?
Hopefully Friday afternoon.
Fantastic.
And we want to be a bit more structured with what we do. So we're going to do a series on tradecraft. So how, instead of just talking about news, because that stuff's never going to last in the world of podcasting, the first episode is going to be all about how do you break down a trading strategy in terms of stats and data. So
fantastic.
Win rate, loss ratios, risk versus reward, all those kind of basic things that we talk about quite candidly.
Yeah.
We just want to break it down.
For new starters, that's really handy to get, so they can use their trader almanac.
Yeah, exactly. We should run some kind of quiz, and we should give out some almanacs, because I think they are ace. They are brilliant.
Mate, got any £30 each, calm down.
Have we got any trade live with IG budget that we can offer?
Maybe we make a trade live with IG almanac. We do our own.
Yeah.
And we just write stuff in.
Yeah. A little calendar.
Now, it looks like, Gavin Ackers, you are very correct in pointing out Lady Penelope is going to be happy with the start that Rolls-Royce is getting this morning. Clearly is a Trump ally, because we're approaching that £6 level again, which is the high from, is that an all-time high? Oh my goodness, look at that.
I just remember when you could have done the placing on this during COVID at, I think it was 75p.
Yeah. Yeah.
What a turnaround that's been. Look at that over the last kind of 3 years.
And what's really incredible about that is that it's so diluted. So that share price now, the market cap now, compared with how it was in 2015, is so much bigger because there's so many more shares. Rolls-Royce testing the Ultra Fan development engine, providing better than expected fuel economy results. Great knowledge there from Away with the Numbers.
Well done, good call.
Thank you for that.
Well, I think they've been catching a bid as well because of their proposed mini nuclear reactor. That's what a lot of people are allocating to them at the moment.
Yeah.
Which harks back to my video game playing times back at uni, playing Fallout 3 and 4, and mini nuclear reactors, post-apocalyptic worlds. Probably not the best, but
So I was a Command and Conquer.
Command and Conquer. I remember playing that. Was it Red Alert? Was one of
Red Alert, yeah.
Command and Conquer Red Alert. What a game! What a game!
Those were the days.
Those were the days. Back when we had time. I'll tell you what, the really old school one I used to play when I was back at school was RuneScape. Did that ever cross your?
No, it did not.
No.
But I see they're strapping us, so they're saying get off. Right, we're going to have a really quick 2 minutes, and then we're going to introduce Luke Moore to Fast Markets. Any of your ideas that you want included, please get them down there. And yeah, we can have a look at Rolls Royce if you want us to. But yeah, any ideas, drop them into ask@ig.com or into the YouTube section. Or if you're watching on the app and you don't have the comment section, then direct to luke.moore@ig.com, and we'll get those.
I'll have to look at my emails.
In the last minute, we'll get that into you for Fast Markets coming up after the break.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Right, welcome back to Fast Markets. So, Luke Moore here for the first time. We are going to be firing the names at each other, getting our real quick take. Is there a better way to express them through options? Is it a bit more of a dull pension kind of stock? Or do we think, oh my God, what is going on here?
What a dog. Okay, cool. Right, so the premise is I give you a stock.
That's it, like a game of table tennis.
To me, to you.
Or what's the latest one? Paddle.
Paddle.
We're paddling.
Okay. Go. Okay, so I'm thinking we need to keep an idea for the Trumpy kind of trend, what's been moving recently, what's happening. So we can look at the oils, we can look at the automakers. But we have had Monkey Man in the chat talk about Caesars Entertainment. So let's have a quick look at Caesars.
So Caesars, well, I mean, where do we start? I must admit, a fantastic hotel in Vegas, but let's have a look at how this is done. So obviously, very, very big beneficiary from COVID. Then it came back off, and it's not looking great on that chart there, actually, is it?
So I would imagine that they're going to be continuing to benefit from the sports book and the kind of sports gambling that is continuing to kind of grow over in the US.
Absolutely.
I don't know. They must have some brands within Caesars that are these online.
There's your upside target, 42% upside with an analyst target price of $48. Who is in there? Barclays, Stifel. I've got a $54 price target. David Katz at Jefferies is at 43, and JP Morgan at 57. So there's it's actually quite surprising how poorly it's been performing.
Now, their numbers are on the 25th of February.
Right.
25th of Feb. So we've got a catalyst within the next
Chart off.
month or so. But they are going to be, and frustratingly, just before the Feb series of options. Jumping into Tasty, if you were looking at a vol strategy, the IV rank on those is about 30. So not a huge amount of juice if you were going to be starting to look to sell some premiums there.
Now, there is a weekly options expiry after the numbers. So if we wanted to, have a little look there, chart up, thank you. We've got the one standard deviation, what's it, 18 delta would be around the $30 mark. So 13% lower than where it's trading. Looks like the mids there would be, 125-ish?
Bearing in mind those wouldn't have updated since Friday. So if there's any moves coming through on those.
There we go. So the $31 puts would be 80 cents. $31 puts, you'll get 80 cents for those.
10% expected move between now and then.
Yeah. And then 37, it's not. So $1.60, it's not great, is it?
No.
Getting about 5% for selling that.
Would you do the other side and you try and buy volatility on it? You'd have to look at more kind of catalysts. So for me, I think this one is probably not a huge amount going on. I don't think. Monkey Man?
Yeah. Right.
Okay, next.
Shell oil.
Shell. So Shell, where are they at the moment? So they've obviously, we thought they were going to be moving a little bit more than they would now. 27.20. Pull the chart up for me. How have they been trading recently?
There. So there is the weekly chart. Let's get you on a daily look more.
Yeah, okay. So we're now trading at levels where it was previous support back in the summer. That lift higher since the start of the new year. That's probably part of that Trump trade coming through.
It's aggressive, isn't it? It's about 12%.
Yeah, it's a decent move, that. Yeah, I mean, look, I think the story around the oil sector is going to be supported by Trump, especially if you start to think about if the underlying is going to be under pressure because of volume, those that are producing are going to have all that volume shoved through them.
Yeah.
So through the refining businesses, through the drilling businesses, through everything that comes through it. So Shell might be interesting. I would imagine actually the oil services businesses will probably be a better way to play it. So if you're looking at
OIS, is it?
Is it OIS or kind of the companies that will service rigs and kind of be part of, as was mentioned earlier, if we're keeping an eye on the rig count, you want to be able to keep an eye on those that are building and bringing them back online. So I actually probably would maybe like a Schlumberger that are much more oil services than not. Maybe even like a Wood Group. How are they trading this morning?
Or there's just the ETF. There's the VanEck Oil Services ETF, which might be a safer way to do it.
Yep.
The ticker for that is codes OIH. Sorry, not OIS. OIH. But yeah, there we go. We've got our expert, Bigger B, as it used to work in the industry, Baker Hughes and Schlumberger.
Schlumberger. Yeah. SLB, I believe. They're not Schlumberger anymore, are they? Yeah, SLB is the ticker. Oh no, they're still named Schlumberger.
SLB.
Maybe they're going to be a better way to play it. Fast markets.
Fast markets.
So what we're saying is we don't, Shell BP, nothing huge amount going on. Look at the domestic US guys, look at the oil services businesses.
Yeah.
Cool.
Great. Like Ward's favourite drugs.
Eli Lilly.
That's the one. That could have got you in stick there.
Right. Cast your mind back to the quiz.
Eli.
Talking about very different drugs.
Eli, the blue pills.
The blue pills.
Eli Lilly. Well, there it is over the last 18 months. The reason I wanted to look at this one was because last week the CEO was on CNBC and he was very convincing. I must say, there was, for the reaction to the stock, the reaction that it had to numbers and the update was fairly negative. And of course, it's been hit. We've all seen what's happened to Novo's as well. But that was the move on last Tuesday. We saw it drop from 800 down to 730. tried to rally, and then we've seen it sell off again to the lows. So my position on this is through Tasty, and it's, let me show that for you. We've got a June big lizard.
Is that a big lizard? Jade lizard?
It is a big lizard with a large foot.
With a large, with a large hat on, surely, because you've got the sold call.
All right, okay, a large hat we'll go with. Right, so I'm short the 550 put, so giving myself a lot of room because, frankly, watching what happened to Novo Nordisk when it had the bad update made me shit myself. Wouldn't want to be short puts on those. So I received about $8 for selling those 550s. I then used that. I bought the 840, 980, right? Went way out to the 980s, 1 by 2. Paying 34, receiving 2 times 10. So 21 points. So 21 points plus my 8 was 29. So I net paid $5 for $140 of upside. I think that is fantastic. So I put that on. It's obviously fairly big size because it's a $700 stock.
I was going to say it's $725. So $140 worth of upside is, what's that? 18%, 15%, something like that?
Yeah, about, well, going off what it is now, it would be, 20%. So now it already has to move 15% just to get up to my strike. Okay, so yeah, it's not an obvious one, but
where's your short put?
550.
550. Okay, fine.
So it can, even sustain a bit of. But I must say, listening to that CEO, it was really interesting. Right, fast markets. Mercedes, sir. Mercedes.
Yeah, this again, Mercedes is a Trumpy one. It's been struggling for a while.
Yeah.
And I think it's probably going to continue to struggle. If we have a little look, see how it's trading. We know it's down. We know it's off today. I wonder what that rally was in recent.
That puts it into perspective, doesn't it?
Yeah. There you go. It'll be interesting to do some analysis on this to find out what percentage of its revenues are actually imported into the US, because I know that Germany is the biggest importer of cars into the States, of which Mercedes-Benz, one would imagine, is probably one of the larger ones, unless all your millionaires are importing loads of Porsches all over the place. But Mercedes are probably going to be more popular. I just struggle to see how a Trump presidency, without tariffing people to the high hilt, will allow or continue to support external people bringing their cars in. He already started talking about the External Revenue Service. Did you hear that yesterday?
No.
So he said we're gonna start the External Revenue Service as opposed to the Internal Revenue Service.
Very clever.
We're going to make everyone else pay for it. Naturally, that will
tariffs. Yeah.
Naturally, that will cause a balancing act with dollar and everything.
What can Mercedes do though outside Trump? Is there a chance of M&A? Is there a chance that the German autos, maybe not with each other, but maybe there's a way to do something with an American company that enables them to get away with them and sort of play into Trump's hand almost?
Yeah. I mean, who would you look at?
Well, they've done it before with Daimler. So, do you look at obviously there's nothing even been spoken about really, has there? But
I wonder if you look at maybe some of the EV producers like a Rivian or someone like that, or I don't think is anyone still looking at Nikola of the world?
No, God,
no. I don't think so. But those kind of companies that are looking and trying to kind of build out their infrastructure with that EV work to it, maybe
something has to be done, doesn't it? Because the cost, they're already talking about cutting 20,000 jobs. So, right. Mercado Libre, look more.
Yeah, Mercado Libre. I like these. So for those that don't know Mercado Libre,
I think we need a sound effect on this.
Mercado, what kind of sound effect would you do?
Mercado Libre.
So for those that don't know, Mercado Libre is Amazon of kind of South America. Is probably the easiest way to explain it.
It's a great pitch.
So it started off as a goods distribution. So you would buy something on the website, it would then get sent to you. Now, Amazon has huge logistics divisions, huge logistics business all around the world. Imagine in South America, you know, through much less developed infrastructure outside of the main cities is much more difficult. Mercado Libre have been building out these distribution networks and have been doing fantastically well at it. So much so that they're now expanding into, you know, a super app across the continent.
Wow.
So things like banking, they're doing a lot in the world of banking, personal finance. So they've been a growth story.
So like a 10-cent come Amazon
kind of minor,
Wow.
perhaps. So I wonder what's going to happen with these. And the reason why I wanted to ask about it is now, again, in this world of kind of Trump's defensive moves to Mexico. Mexico are a big kind of revenue line for Mercado Libre. Brazil next, and then places like kind of Chile and Argentina.
Right.
And so I just wonder whether, with that US listing, I just wonder whether the balance between growth and then domestic people being able to allocate towards them might come under stress. So I think they're going to be an interesting name to keep an eye on.
That's definitely one to, wow, it's a strong buy on analyst consensus as well. $2,245 price target, that's 22% upside. Morgan Stanley, the big bull, say it's going up 30% from here. But like you say, highlighting the risks, there's obviously clear risks, right?
Yeah, the one thing to keep an eye on, it's not that liquid. So it's an expensive stock. It's a an $1,800 stock. So it's quite expensive. And Tasty have got it as a 1 out of 4 in terms of its liquidity on options. So options are probably not the place to play it because the spreads are too wide. But if you're looking at growth, if you're looking at an opportunity, if these do look a little bit weak at some point, they might be one to just do some further research into, because I like the story. It's really interesting.
Right. Fast markets, Luke Moore.
Fast markets, what's next?
We are over the final hurdle. We've only got 30 meters left. We've got 10 seconds. Cocoa. Yes.
Cocoa.
Hit you with the hardest one last.
With the hardest one. Well, they've been squeezed up because of supply issues all across, I believe it's a South America crop.
Fast markets, Luke.
Fast markets, Brazil.
What do we think?
I don't think the supply issues have changed, so therefore keep an eye on it.
Brilliant. Nicely done. Hope you enjoy the segment. Hope you all enjoyed the segment. We're going to a quick break, and then it's going to be Miss Angeline Ong with you on the screens.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time.
The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Hey, welcome to the show with myself, Angeline Ong, and Matt Arbour, who's going to come here and tell us about the latest news from the volatility desk, and also, get that out, and volatility desk, and also the action ahead of the all sessions, and also Wall Street. Very exciting day. Of course, yesterday we all had to pause for breath, wait, everything happened yesterday, but now we'll see some impact, hopefully. What are you seeing in the early hours?
Well, yeah, morning, Ange. Just going to say it's almost as if Trump couldn't have designed it best. He has a national holiday for his inauguration.
Right?
It's just wonderful, wasn't it?
Except the weather didn't work in his
The weather didn't work in his favour.
Yeah.
It's disappointing. So yeah, interesting. We had the holiday yesterday with equities closed, but FX markets were open, crypto was open. We saw some quite sharp movements yesterday with the sort of traders looking to jump on, not that anything new was said, but jump on every move. And we saw really heightened volatility yesterday. The dollar came off really sharply during the afternoon as comments on tariffs were made. Again, nothing new, but traders looking to react on every announcement. Whether this is traders reacting on announcements or just algos, primed to hear the right words and trade in thin markets. It looked a bit too sharp for it to be anything other than that. But I suppose the real excitement was in the moves on crypto, where we saw that 5% rally on Bitcoin to new highs across the morning, and then pretty much from the moment the speeches actually started, we saw a reversal all the way back down to the 100,000 level. So it's quite interesting, this concept we've had 3 months now of markets reacting strongly, buying the rumor. Are we in the case now of it's going to be a sell the fact, the old adage of expectations and then reality hits?
So I like that view, and I like that whole contrarian view, because so much of it has been baked in, right? We've seen that big run up in the dollar.
Yeah.
We've seen Bitcoin as well, and we saw yesterday that bump up before it came off that 102 handle. Melania also in on the crypto action there. Just a reminder, trader friends, of course, you know, crypto and crypto related only for pro traders here. But, you know, really
and no advice on buying Trump coins here.
no advice whatsoever. You know, it's a real, I can hear like the tasty people going, oh, contrarian trade, you know, because we've had tech stocks, you know, with the run up, we've seen markets at all-time highs. So are we now in the process of unraveling those trades?
Well, quite possibly, of course, we are at the same time. It's not just Trump. We just started reporting season. We saw the banks last week, strong results from the banks, which wasn't really a surprise given what markets have done. You know, it's boom time in brokerages again. I think we've got a few more brokerages today. We've got Schwab and IB coming out, which we would expect to show some strong returns given what the markets have done. But then, yeah, no one's really that interested in those results. People are going to be looking at the bigger tech, starting with Netflix. Netflix this evening obviously has seen a fantastic run up over the past year. Almost, you know, we've doubled in 2 years, or doubled in 3 years on Netflix, and it's been part of the Mag 7 drive. You know, I suppose it's always a difficult one. I'm left saying, God, there's nothing on Netflix anymore. Generally, it's.
Don't say that.
Well, that's not true. There's lots of stuff on Netflix. Lots of rubbish.
Did you see my face? I was like, don't say that. Also, I've just signed on to Netflix, so I'm a relative newcomer.
What was the hook? What drew you in?
$9.99.
$9.99.
And she's like, you know, talking about her pension, and here she is complaining about the fact that they pushed my price up to $12.99 after 3 months.
Yeah.
So they got me, Matt. I'm now feeling quite, you know, upset by it, because I felt like I'd waited for so long, right? Everyone was in on the Netflix bandwagon. Everyone was talking about all these series. You watch Netflix too, don't you?
I do watch Netflix. So I'm saying that's.
Come on,
there's not been anything good on Netflix for a long time. Would be my complaint. And
I watched the I Am Tim, the Avicii, and then cried my eyes out at the end of it, because I know you said it was stupid of me. But, you know, I didn't realize he was dead.
It's a surprise ending for you. It's just wonderful to live life like that.
I thought it was like a marketing thing, you know, buy tickets to the next. Anyway, Netflix has been such a stellar stock.
Yeah.
Looking at the monthly chart here, people. This is the monthly chart. It has gained, I mean, since, you know, August 2017, it rose really high, then it came back down. This is the monthly chart here. And then everyone thought, oh God, is this it? But then June 2022 onwards, it was just, you know, on a tear.
Well, it's the kind of interesting story around the fundamentals. Obviously, Netflix starting, it looked like you're going towards that Netflix. Everyone talked about Netflix. Netflix were the streaming service. Everyone caught up. The share price came off sharply as Disney launched. And the various other streaming services launched, and it became apparent it's quite hard to actually monetize these things. And Netflix were able to, mainly because they had such a large share of the market, start squeezing those subscriptions. You know, everyone was drawn in at the start on the $4.99, where they were discounting aggressively. Once you've got the subscribers there, people are surprisingly sticky on TV as well as many other things. You know, Netflix seems to be the one which people keep as their subscription. Everybody dips in and out. Well, Apple TV is terrible, you know.
Yeah, now TV is
always
terrible.
Discounting and coming in and out.
Yeah.
Disney, it's, you know, I suppose their price points have gone quite high now.
Well, there you go. I got rid of Disney and I got rid of Now TV in order to sign on to my $9.99. Not anymore. Netflix. But taking a look at Disney, trader friends here, Disney is also a really interesting stock here. You know, if they can get their leadership issues and also consolidate their parks and streaming strategy, I think, you know, hopefully we'll get to a bottom. We'll see the stock start moving upwards. It's not quite there yet. For me, this is not quite a bullish picture yet. Disney,
I've tried to look for a Trump effect on Disney there, you know, given
his stance
exactly
on LGBTQ++, and
Yeah.
also his stance on taxation in Florida. But also, if you look at just the revenue through streaming, I mean, it's clear everyone's been looking at Netflix's performance, and it looks like Netflix has won, at least for now, the streaming wars.
Yeah, well, it's the same as the Facebook story. Everyone back in the day, I'm an old guy. I remember people saying, "Oh, Facebook will never survive." I said, you know, whatever you say about Facebook, once you get 1 billion users, you know, you have that critical mass,
yeah.
and you know you can do things with it. And in social networks, on TV, Netflix, that first mover advantage of it's still the service that people turn to and people default to, and almost, you know, they quite cleverly have a lot of comfort viewing in there, that, you know, that at the start running Friends, like who wants to watch Friends, the networks gave Friends away for nothing because everyone's watched it 10 times already. People still repeat watch it. It's some of these things, these series is not all about the new content for a lot of people. It's watching repeats, and it's having that back catalogue. I
go back even further. I really love, if anyone has a hack on the back catalogue of The Good Life, please let me know. Please let me know, because I can't find it. I could find all these little excerpts. So Disney won as well this week to look at. What else are you watching? Because, you know, not only do we have Netflix, but we also have a raft of other names. We've got American Airlines later on this week. We've got Procter & Gamble, Q2. Alcoa, of course, a big one joining the fray as well. American Express, we end the week with a nice, wholesome stock that gives us a bird's eye view into the US economy. What I'll be personally looking out for there is, you know, what the repayment timeframes are, whether they're reducing, whether they're pushing back out again. Back half of last year, it was pushing back out. So people who pay in 2 months' time their credit card bill on American Express, it was going out to 3 months, right, 4 months. And also, because it's predominantly used in the US, it gives us a good idea of how sectors are doing there. Any of those that pique your interest?
I'm not sure. I kind of have a feeling that it's going to be less about the individual stocks here with these names, and more about the general sentiment as to how this concept does the market now pause and consider it. So we've had this incredible run higher on optimism about what might happen, and suddenly reality is here. Do we now pause and say, you know, this is, the man may be the Messiah, but it's, you know, it's not all good. This is, you know, we're going to start seeing some perhaps quite inflationary policies coming in. You know, the Fed are already have made their stance clear that rates aren't going lower going lower quickly. You know, tariffs come up, we put prices in. Does the picture actually start looking any better? I'm not sure it does, and I think we're going to see a pause in the rally and people considering whether they want to keep on buying equities at some of these valuations after the run up.
And we'll see whether or not, especially with volumes as well, keep a close eye on volumes, whether that starts moving away, maybe into, you know, areas like and indices like the DAX, you know, a reallocation of funds. I'm going to show you my watch list here on my chart for those of you thinking maybe this is not a confirmed view, and we'll see some of these stocks move higher because of what he's promised. Geo Group, that's a play on the fact that he is still, you know, pounding the drum about, you know, getting illegal immigrants.
I say no,
get
Geo
that
Group.
song
What do they do?
out of my head now. They build effectively structures.
They build walls.
Prisons. Containment centers.
Okay.
If you like. Tesla, obviously the BFF play, right? BFF. We were talking about this just now. You're like, yeah, you know, Musk has said he doesn't want subsidies. I'm like, yeah, he doesn't want subsidies. He just wants no competition,
Exactly.
right?
No subsidies, no competitions.
Yeah. No subsidies, guys, but I don't want anyone playing in my field. No one, I want just straight, you know, that's the goalpost over there. I want straight, right, access to the goalpost. Core Civic, another one that is in that infrastructure space, which saw a jump when Trump won. But as I said, that's like a take it off straight away because of the extreme volatility there. But these, if he goes through with the whole, we're going to get those that have had convictions first, then, the mood music goes to, well, then we're going to look at others. Then, these could be longer term plays. Also looking at ExxonMobil, which is all sessions on the IG platform, and Chevron, because, this whole drill, baby, drill. Is going to lift up. And also, don't forget, trader friends, if you like the oil space like I do, look at those middle ground producers, those that will benefit from exploration, but are also nimble enough to, and they have projects already in the Permian Basin. Because if it's drill, baby, drill, and the price comes down.
Well, yeah. When you're sat in the Permian Basin, it's all about what the price is and what the marginal price is.
It's the price.
If you're big oil, because we're in a different dynamic now, because big oil have taken all the wildcat players in the Permian Basin.
Yeah.
We're sat there back into a stage where big oil, who don't mind a lower price, you switch on your offshore and you have the plays in the Permian Basin, then less exposed to wildcatters coming on and turning on the flow. They're controlling as much of the supply. So even though some of those acquisitions looked really, really quite toppy, I think, well, it's still going through, I think, the Chevron Hess acquisition and some of those smaller ones down the line. I'm struggling to remember some of the smaller fracking companies, but the big names moved in, at the $50 oil, and they bought up the fracking companies as well. So it's less of a play for them with being exposed to increased drilling in the Permian because they still have all the offshore assets.
That's right. And it's all to do with that price, right? If it comes down enough and makes all this become achievable, then we're going to see a lot of action in that space. And then the last three in my list, I'm smiling like this because I still feel like I smell like Luke Moore.
Before we came on air, there was a discussion on Ode to Luke Moore.
Was that strong... And then we were like, or is it Richie Rich? But no, that's not Lynx Africa.
Yeah, there was
Luke's deodorant or perfume.
Much classier than Lynx Africa. Luke's not a Lynx Africa kind of guy, I'm suggesting.
Caleb, what did you say earlier on? Whichever it is definitely stronger than Lynx Africa. It's a lovely smell, but I feel like someone else. I feel disembodied here.
Well,
Do I look like Ange still? Because
But your remarks about being in a male locker room were completely wrong, because then it would smell like Rowjet. Which is, yes.
And then last on my list, trader friends, we got the usual suspects, the Mara holding the right blockchain, the MicroStrategy. Going to keep a close eye on that in 5 minutes and counting.
Well, these are of course interesting because the crypto play. This Trump is the crypto president. What is there he can say about crypto? Okay, we can look for the concept of deregulation, but does that actually that favours perhaps a Coinbase or not? Doesn't favour Coinbase. It brings in proper deregulation, of course. In a Trump world, you don't have proper deregulation. You have onshore players only. So perhaps favours a Coinbase, but does it actually favour the coins having deregulation, opening up the market? When we saw the listing of Bitcoin futures, that didn't actually make crypto prices go higher, because you were able to get short selling and pros come into the market, trading in the other direction. So that's a really interesting play, those crypto stocks.
Well, we're going to have to head to break now, but before we go, thank you so much for coming on, Matt. And if you saw that flick up earlier, that's just a look at the heat map that I'm watching ahead of the all sessions. Just showing you, flashing it really quickly.
You heat map, nothing to do with deodorants.
Nothing to do with deodorants, people. And we'll be right back with all sessions here on IG.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered. Live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education, so looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre, you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
All sessions with myself, Angeline Ong, and we are out of the gate right now, taking a look at the chart here for you because, you know, this is the brand new world of Trump 2.0, and just checking in on the early view for you here on my dashboard. Moderna up 4.9% there. JD.com also up about 3.6% upstart. Those of you that trade the stock, I know quite a few of you do, up more than 3%. A lot of the chips and the techs are up as we speak. No surprise there that Tesla is also on the winners list, up 1.7%. All sessions. Monkey Man, Palantir, also within the top 10 there. You were asking me about Palantir. It's up 1.6% in the all sessions. 2024 was an awesome year for Palantir. Those of you that own the stock, well done. You can pat yourself on the back. And I think 2025 is likely to be another big, good, or rather up year for Palantir. Take a look at the Palantir Santa workshop. For those of you who've not heard about this, take a look at those plans out there. NIO also up slightly. Let's have a look at the losers now for you, because Plug Power is down 5.7%. MicroStrategy is also down 3% there. We're seeing just a few names in the crypto-related space. Riot Blockchain also down slightly, and Coinbase. So maybe taking of profits there. Just a gentle reminder, crypto and crypto-related are for pro traders only. If you do want to trade these, though, do call your client manager or call the desk, and they will explain the guides and guardrails for you. Rivian is down a third, 0.3% really. So that is a quick look. Checking on Netflix as well, because as you heard Matt Arb and I talk about this, this is the big one that we're waiting on later on the day. Just zooming out slightly so you can see my date view here. And Netflix has been on a tear. This is the monthly chart here. people. However, bear in mind that it has had such a big run up that it is likely that if the results don't meet and certainly don't beat by a big margin, then we could see a bit of disappointment there. However, Netflix looking strong ahead of that. Everyone's talking about not just looking at those margins, but what they say about the performance in its sports streaming space. NFL, of course, a biggie, that boxing match as well. Netflix, of course, the first in that space. So it certainly has that first mover advantage. Gold as well. Want to check in on gold for you because gold climbing to an 11-week peak. People, we are in that move again. This is a 10-minute chart though. However, just looking in on gold, bear in mind that on the 10-minute chart, it is moving away. And can you see in the white space there, I've written a reminder to myself because this was my setup this morning before coming on with Matt Arber. I was looking for a bounce off 2725. If it did, my next price target is that perforated golden line, which is 2734. It did not and is heading lower on the 10-minute chart. So this, in my view, means that that thesis is off for now and we're looking bearish right now. Monty is on the line, I've been told, so we have to go straight to him right now. I'll revisit that hopefully before the show ends. Monty, can you hear me? Oh, we'll get him after this. Sorry, I thought I heard you say, hey Monty. I was so excited that I thought you were on, and actually they were saying Sting to Monty. I just heard Monty. How are you?
Yeah, I'm good. I'm good. Sorry, I'm a bit late today. Yeah, I had a calendar invite from you guys for 40 minutes from now. So I thought, oh, okay, I can take my time at lunch. Then they're like, no. He's like, no, you got to come. I'm like, crap. I ran over. Yeah, everyone in the DIFC out here just saw me like just running through. I hope they didn't think I'm like some sort of threat or anything, you know? Yeah, running pretty quickly. Thankfully, I wasn't carrying a bag or anything, you know? It was just me by myself, you know? That's good. Just holding the phone, typing like, okay, I'm coming. Yeah.
We haven't had any alerts so far, so I think we're good. Thanks so much. I'll look at the calendar invite later. Maybe it's the time clock change or something, but I'll check on that later. Good to have you on. Loved your candid reply yesterday when I said, of course, today is a huge day for markets, especially coming back off a public holiday over there. But first off, what was an American doing on an inauguration day in Dubai?
Well, technically, it's not a day off over here, so I was working. And of course, I have to send out the reports, got to send out all the content. So that means, you know what that means? That means I was working pretty much. Cool. I think, was I wearing a red shirt though? I think I had a red shirt, so maybe it was like a red, white, and blue kind of situation, maybe a little bit. Or my colleague had a red shirt.
Did you have stars?
My colleague had a red shirt. I got a blue shirt. So
stripes.
Yeah, we kind of got that. There was that vibe going on. Yeah, a bit of that.
So I've got your daily market report up. Everyone here is braced for action. Of course, you've got the all sessions out already. A lot of the tech names, Tesla, of course, higher. In just the 6 minutes that we've had in all sessions. What do you want to kick off with? Should we start off with the S&P or the NASDAQ?
We could start off with...
Lots of people asking about the DAX as well. Our trader friends wanting to know what the sentiment is looking like for the DAX.
Oh, yeah. Well, if that's the case, then let's go ahead and start off with the DAX then. So what is that?
There we go.
Yeah. So let's go ahead and start with the DAX. Yeah, I mean, you look at the technical overviews, it's difficult to be anything but bullish at this stage, right? Obviously. But the thing about sentiment, though, is that, you remember, I talked before about how it used to be that the DAX was one of the heaviest range trading that I would ever see. It's not the case anymore. I think I'm going to give the heaviest range trading award to the FTSE, just as it's reaching, it's moving higher. But the thing about the DAX is they have been a little more cautious shorting into gains, but a part of it is also the fact that there isn't much financial power left. They're already at 87%. I mean, extreme. I told you guys before, I labeled the extremes as 78% and anything above that. They're at 87 now. So they were 86% yesterday, the inner circle, 87% as of this morning. If it does kick even higher, the highest we could see is probably go maybe to around 90% is what I've seen. But the moment you see the smallest of pullbacks, a lot of those guys are going to be looking for a chance to get out, unless we get to what I called before the no man's land, no man's zone, where you've got shorts initiated below that level and fresh longs are initiated above it, then it won't make one. Then you'll see sentiment kind of get stuck, and that's when you know, like, okay, we're in that range, we're in that no man's land, so to speak.
Well, that sounds about right, because you know, the DAX was you know, really kind of flattish earlier. So was the CAC, really. Futures for the S&P 500 up slightly. Of course, all this coming after U.S. markets were closed on Monday. What are you expecting in, you know, when the cash session opens today, after Trump's release of the America First trade policy?
I think that here's the thing. A lot of times, you know, if you look at investor flows before this was happening, there was a lot of, we're kind of on hold, wait and see, keep a little bit of cash on the side.
Yeah.
And then as they progress, and it's kind of like, you know, before, well, a little bit, it's like an FOMC. When FOMC would be considered a lighter version of this, where before the event, about a day or two before, the investors are like, let's wait and see, and then the big money starts to flow in the week or two afterwards. And I think that now you got Trump 2.0 right now. Everyone's, of course, waiting for more clarity. I know we got more, you know, a bunch of, you know, flurry of executive actions initiated, but a lot of times you're going to wait for a lot more clarity. I mean, we've heard about with the tariffs getting, okay, February 1 instead of on day 1. So if you're still waiting for clarity on all these items, then I think once we get past that hurdle, then you'll start to see the flows from investors sort of push. But I think I don't see how someone who's already in U.S. equities is going to say, let me get out of U.S. equities and let me go into something else. I think if they have excess cash on the side, they'll say, okay, let me consider, for example, I'm not saying this is the case, but let me consider some emerging market, or let me consider this or that. But I think those that are already in it, I haven't seen them really coming out of it, and I haven't seen the narrative saying I want to get out of it and go someplace else just yet, especially if it's, you know, American exceptionalism or Trump 2.0 is going to sort of give it that extra oomph. At least that's what the expectations are.
And with the expectation, you know, I was talking about this with the Tasty people who are, you know, they love contrarian trades. Matt Arbo is just here with me from the volatility desk, and he was also saying that so much of the Trump move was baked in. Are we likely to see this unraveling in the next week or two? I mean, what are sort of like the pivot points that would kind of highlight to, hey, Monty, it's all changing now?
Well, here's the thing. Next week, we got the Fed expected to hold, although it's quite clear that Trump, even during his, you know, when he was president, the first time around, he wanted lower rates. He even wanted negative rates, all things there. But he wants lower rates. He wants lower pricing. He wants the Fed to lower. You know, he's going to, I'm guessing he's going to put his 2 cents on the matter. But at the end of the day, the expectation is they're going to hold. But we got the Fed next week. You got the PCE data. And then, of course, we got earnings from the heavyweights, the big tech, which I think is going to be very important, just because if a large chunk of this was based off these flows to get us to where we are. Yeah, the recent moves had a lot to do with Trump 2.0, but before that, it really had to do with AI. It really had to do with tech. They need to continue to show growth. They need to show, you know, a large chunk of the earnings growth within the S&P 500. I know one of the sectors was financials, but you look at the rest, it's pretty much tech, you know, tech, communication, consumer discretion. That's where a lot of the growth is expected. So they need to live up to that. And any sort of miss is something where investors are going to go, okay, maybe, okay, now is the time I want to trim off of these valuations and go into something else and start considering areas that are considered cheaper, whether in the US or even outside of the US. I don't think we're there yet, but I think that's a significant hurdle aside from the inauguration, aside from the policies coming out. I think that is a major hurdle for investors to say that you need to show us, not that you're investing in AI, that was the past, that you're going up with a ton of money into AI and you're investing. You don't need to show us that you're incorporating AI. You need to show us the returns from their AI. You need to show us that it's really, Wall Street doesn't have that much patience. So let's see whether or not they can actually come up with those figures and live up to those or beat expectations, specifically when it comes to those items.
Totally agree. 2025 is, where's the payback for AI, right? Where are these revenue streams that were promised? Let's move on to currencies now. Lots of FX traders here. There's looking like a huge amount of volatility, especially from the beginning of this year coming into the FX space. Looking like there's more scope to fall as traders might sell euro versus the dollar. However, there was a slight rebound, recently. What are your sentiment wheels showing us on the FX side of things?
Yeah, starting from Euro USD, I think that was the nicest. That was a real relief for them I'm not saying I'm not saying all those who are long Euro USD are pro-Trump, but they definitely are happy with the results of that, seeing that the Euro rebounded. You saw sentiment, which was heavy by 66%, come down. That was just the start of the week, by the way. So that was yesterday. Dropped to 56%. It's the lowest we've seen in weeks. And that's kind of what they want to see, because we had this bear. The overview, by the way, was bear average. It's kind of shifted to a more cautious stance right now. I know that this has a lot to do with fundamentals, throwing a wrench into technicals, breaking things out of its, for example, briefly taking out of its bear channels, so on and so forth. I realize that there's no doubt in a longer term time frame on the weekly, there is that negative technical bias there, but a lot of clients were, because of the rain, because it went slowly lower, a lot of clients tried to trade this, which with yesterday's move was clearly a plus. And if you just go down one slide, just the GBP USD, just to show there where it was a much tougher task, because here it's much more difficult. If you look at the way the pound dropped, it was much more difficult to work your way out of it. So they were actually, they were shy of extreme buy territory just yesterday. That 75% dropped all the way to 68%. These are big, even for IG clients, those are big shifts. And if you look at institutional sentiment, the next circle to the left right there, they've been long. The green dotted line on the map, they've been long for months, and they just shifted to the middle. So they've been short the euro, they've been short Canadian dollar, they've been short the yen, short the franc, short the Australian dollar. And the pound was the one exception where they were long, anticipating that it would relatively outperform. Hasn't been the case. They shifted, and this, of course, positioning is as of last Tuesday. So the report gets released on Friday, Friday evening, our time. I incorporate it into the daily and weekly sentiment report on Monday, but the positioning is as of last Tuesday. So they pretty much got impatient. And went, okay, you know what, we're down to just 50-50. They finally shifted to the middle. But generally speaking, the mood has been one of long dollar amongst COT speculators. You could say, okay, is it positioning because for Trump, or is it also, or is it a situation where they just like to go with momentum? That's just the way they are. IG clients usually go opposite. COT speculators usually go with the momentum. So is it a bit of both of that, or is it a matter of just momentum? Whatever it might be, whatever the case may be, they've clearly gotten impatient with the pound, and yesterday was not a good day for them, and it was a good day for IG clients. Let's put it that way. I know
that's a really good thing to note, Monty. Can you repeat that again? So the IG client sentiment normally shows the contrarian, whereas the institutional, you said, normally goes with the current sentiment.
A lot of time, you will see. I mean, it depends on the market, right? Because some of these markets, they're used for hedging. So when it comes to indices, for example, S&P 500, just put that aside. That's not the best. That's not the best one to look at when it comes to correlations in terms of looking at momentum. But as a general rule, I think Dow is much better for Wall Street on the platform and on the report. That's a better indication of COT speculators going with the momentum, trying to go with the move, versus IG clients who have a tendency to want to go opposite. And by the way, it's not a bad thing. I'm not saying in a bad way where IG clients go opposite. If you have range bound action, I mean, the FTSE, for example, I know now it's finally broken out, but for years it was relatively range bound. So range bound strategies,
here we are,
FTSE outperformed. Net outperformed before this. So if you look at a weekly and you look at how range bound it's been, only now, and look at the yellow dotted line on the map. You're looking at that's IG client sentiment. Goes above the black line, their majority buy. Goes below, their majority sell. So every time the FTSE would go down, we're talking just 200-300 points, bam, they go almost reaching extreme buy territory. Then when price goes up, there's the longs take profit, shorts initiate, and now we see when we get up to these levels, because we're at record highs, because we're going past the key resistance levels, because you had heavy range trading, look at how high the extreme sell buys goes up to 84%. It's not as high as the DAX just yet, but if you give it enough time, if it keeps moving up the way the DAX has gone up, probably will see it closer to 87, 88, 89%. And no doubt, in my opinion, the moment it pulls back, even slightly, you're going to see a lot of those shorts try and get out, because they're not in it for a long-term move. These are range traders who are in it for a short-term, for relatively short-term intraday or intra-week action. So again, this is one of those cases where, going, you might look and go, oh, well, going opposite, it's a bad thing. I should have gone with. Well, if you take it into context of how much it's always been returned, we're just looking this is just from November of 2024. If you look at it from like November 2022, and you look at how, we spoke before about how the FTSE never really had its time to shine, or never really had its day. That kind of reinforced a lot of traders in this sphere to say, okay, let me range trade it instead of going for breakout strategies.
Gotcha. And is this, speaking of breakout strategies, is this sort of the time, do you think, that, breakout strategies remain the strategy flavor of the day, given we've got Trump 2.0 out of the gate, given we've got Fed ECB, given we've got, you know, these tariffs details, and of course the expectation is that they will come into force February 1st.
Yeah, so by default, like you mentioned, if you've got an uptick in volatility or expecting an uptick in volatility, then breakout strategies off of old levels derived from old intraday ranges, which are much narrower, are obviously going to outperform. That's the expectation. And I think it was last week when I mentioned that when it came to currencies, we were getting to that point where contrarians might want to sneak in right about now. And that meant that on those bear averages, going contrarian, which is for a buy strategy. But here's the thing, you're going to have a lot of these moves where it goes up, and then today, you know, we got a big intraday move back down. These breakouts are going to outperform until the levels start to catch up with it. And I know that usually takes, you know, you might say, okay, are we kind of reaching there? We normally would be. But next week, like you mentioned, we've got the earnings from the heavyweights. We've got Fed pricing data, ECB, all that kind of stuff. And that just means that you're kind of thinking to yourself, okay, hold on, not yet. Maybe breakouts still have the edge. And once we still haven't gotten full clarity, by the way, when it comes to all the policies that Trump 2.0 is gonna initiate. But generally speaking, that's the idea that, yeah, breakouts by default, I wouldn't be surprised if breakouts will be at the ready compared to reversals. And if you are going to go opposite, ideally doing so after a significant reversal. Let it break, let it keep going. Only if it comes back, you then initiate. So don't go for the first move. Don't be the pawn that gets stopped out in the first move higher, for example, in the case of the FTSE or that. Let it go first. If it comes back, then you can consider initiating with, of course, putting your stop loss, which is why in the report, you know, I put stop loss. I never put a take profit, because as human beings, we have no trouble taking profit. We have a lot of problem closing out something that's in loss.
I like that. I like that. I am a big fan of going with the second move too, because I find the probability, the probability of profit much higher when you trade the pullback or the second move. But you know, I do have take profits in place, weirdly, and stops all the time, because I do think that you can get too greedy. And I've been there so many times, Monty, where it just, I didn't put a take profit in, and actually I've wasted half my profit because I didn't cut it out and take right at the top where I thought it would be. So that's why I do it. Speaking of breakouts, one that we're seeing on, and I want to talk about this because we have a lot of people interested in trading gold here, is gold on the 10-minute chart. Just taking a look at your market report, because you also cover silver and WTI as well, both also of a great interest to our traders. What's gold telling you in the coming week?
Gold was and still is a volatile overview on the daily time frame. For the weekly, I actually shifted it to cautious consolidation for both gold and silver. But gold is volatile. It won't take much for silver to tilt in the same direction, just because it's taking, I want to say it's taking a bit longer for levels to normalize accordingly. But if you look at gold, sticking with gold, I want to note one interesting thing on sentiment before I get to that. But one interesting on sentiment is that yesterday, gold went up, silver went up, WTI went down. Normally, you would expect gold buys to drop because clients who are long will start to get out. But look at that, it's actually gone up from 57 to 59%. Silver prices went up or finished higher. And what happened to sentiment? It actually went up. Buy sentiment actually went up, going with the move. This is very rare, by the way, for IG clients to do this. And when it comes to WTI, oil prices dropped. Sell sentiment should be dropping as shorts get out and longs initiate. It actually increased from 55 to 58. So these are three cases. I mean, within the commodity sphere, yesterday was quite interesting from my point of view to see that from a sentiment standpoint, clients actually going with the move when it comes to commodities, anticipating that oil might be dropping further, seeing that and expecting precious metals to potentially move higher. It doesn't mean that's going to happen. I will say that with gold, I think we've spoken about this before. You know, my fear is that what are we basing gold prices on? What's the new formula? You know, it used to be we're looking at inverse real yields, for example. Well, okay, yields went up, gold prices still went up. There's a clear break in the correlation there. When is it going to come back to earth, or when is gravity going to finally have its pull, or will it might not have its pull? That to me is going to, if you want to tackle it just from a purely fundamental standpoint, technical standpoint, I'd give it still a volatile overview on the daily time frame. And indeed, even today, you know, it's gone well. It went past it went about $10 above the first resistance before coming back down. And from a fundamental, if you want to just put in a fundamental overview into it, I would definitely also say that you don't know when the rug's going to get pulled and how large a move you could really get. Gold still has the capacity for some of the biggest moves in volatility, down, up, you know, depending on what formula we're going to go with. But that to me is one of the scarier ones. And I know I might be alone in saying this because a lot of people go, what do you mean, gold's going to go up? What are you talking about? Sanctions or geopolitical events, so on and so forth. I'm not so sure. I mean, when it comes to gold, I think breakouts net, they have been outperforming. I think net, they are going to outperform. It wouldn't surprise me if they outperform by a bigger margin over contrarians in the future. When does that happen though? When is the markets can stay irrational longer than you can stay liquid?
Yeah.
When will that happen? Yeah, we'll see. But that's kind of my expectation when it comes to gold. So yeah. Oh, by the way, institutional sentiment on gold, this is an interesting one. 90%.
Wow.
Extreme long. 90. Yeah, it's just been going up. It's been one of the I mean, for me, this is just wow. I mean, silver's at around 74%, oil is 64%, depending on which, and oil's got a lot of different energy contracts on the CO2 report, but gold getting to 90%. Yeah, scroll up one. Yeah, gold getting to institutional sentiment at 90%. Keep in mind, if these guys are going with the momentum, they will just as easily unravel and unwind those positions. And they bought from much, 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 much lower levels than these. I mean, you have to look at like a weekly time frame chart or on the weekly sentiment report to see how to go far back to see exactly where they initiated those longs. We're talking sometimes $1,000 lower than where they are now. So they've got a very big margin to play with. So I don't want someone to just look at that and go 90% long, bam, all in at these levels. No, hold on a second. Be careful. These guys have got a lot to work with. But yeah, that is an interesting one on the institutional front.
That's also really interesting, the institutional sentiment with the sort of, hat on that, we're going into another 4 years of Trump, right? And it's also fascinating because to me, what I'm getting from gold is that we're going to be range bound for a bit until we get a clear breakout. But this chart is so fascinating. You're right. It gives us a bird's eye view into what the institutional investors are thinking. And at the moment, they're going even longer compared to last week, which is incredible given that, we've seen gold at such high levels for such a long time.
Yeah. I mean, for them, here's the thing, to see them position for gains at a lower price level, you go, okay, fine, it's a pullback, you want to position, get in, so maybe there's another run higher at the lower end of a bull channel because you think the channel is going to hold. You see that maybe with indices, it's fully understandable. But at these levels, as it's moving higher, to keep on piling in and to take it to 90%, that's not something you see every day. It really isn't. It really isn't something you see every day. So I mean, on the weekly, it's still a cautious consolidation overview for now. So you're going, because weekly levels are much larger than daily levels. So they can sort of remove that excess noise that you have on a daily time frame on each day levels. But when it comes to weekly, it's still a cautious one. But I agree with what you said about if you think it's range bound until the breakout happens. Once that breakout happens, though, oh boy, once the breakout happens. But if you want to go conformist on the weekly, or in the case of the daily, that would be contrarian if you're going for reversal. Ideally, though, a significant reversal. So waiting for the first move to pass and then going afterwards. You could consider a reversal. And in fact, even if you look at, I'm just taking a look at the price. So coming out to 20. So right now, yeah, it's standing it's hovering right near today's first resistance. So it already went past earlier when I already went past, gave a nice clean break for breakouts, and now it's coming back down. That would be classified as a significant reversal, saying, okay, I think it's going to move. If you think it's going to go back down, but you can see why by default breakouts will still be in the conformist camp compared to reversals for contrarians when it comes to gold on the daily time frame. On the weekly, the roles are reversed, which I know a lot of you going, well, hold on a second, how can you have different overviews? Well, look at a 1 hour chart, for example. It looks like the sky's falling.
Yeah.
You zoom out to the weekly and it's moving up. You can have a bull overview in one. You could actually have a bear overview in another. It's rare on the daily time frame and the weekly to have opposing overviews. It's also rare to have gold and silver have opposing overviews for such a long time. But it can happen, is what I'm trying to say. You can have different and even contrasting overviews between the daily and weekly time frame, and between precious metal cousins or between key indices that are usually highly correlated with each other.
Precious metal cousins. I like that. I've never heard of that before. Trader friends, there's also a technique that I use. Maybe you already use it. And before I put down a trade, if I'm in the thesis point, I go from yearly to weekly to daily to 10-minute, just so that I know that there's nothing strange happening on a longer or shorter time frame, or maybe there's a breakout emerging on the shorter time frame. I need to be aware of that if I'm making a very short-term trade. So, you know, don't forget to I almost call it the zoom strategy, and you kind of look at different time frames. Lots of
Actually, I use
comments.
that exact word. Yeah, it's starting from the long-term time frame, zooming into the time frame that you trade. And by the way, that's what I like with IG's platform. We have the split chart. You split it 4 ways. And what I like to do is I like to put weekly, daily, then 4 hour, then whatever it is you trade, 1 hour, 15 minutes. So split chart, do it on 4, and you can get that. And every day you'll just see it, boop, 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 and then you start your trade.
Oh,
you see what I mean? So you
nice.
can do that on.
Wait,
yeah.
is there a
and
default
also,
thing that I can punch it into? Is there
if you look at the chart on IG's trading platform, you just go to okay, so you know where it says weekly, mid, price, all that.
Yeah.
Then next to mid, next to where is it? Second.
Can we punch up Monty's? Okay, maybe this is another. Maybe we can do this next time we're on. How much time have we got left? We've got a minute left, Monty. We'll save this for the next slot. Got some really good comments coming on the chat. Path Jolly saying, Angeline Ong and Monty, is there a way we can access Monty's reports? So packed with insights. Loving that comment. Thanks for posting that there. We are working on it, Path Jolly. Believe you, we are. Both Monty and I mean, he's lost hair over it. I've lost weight over it. I'm telling you, the easiest, fastest
Hold on
way.
a second. Angeline, that's a good thing. But if you've lost weight and I've lost hair, hold on. Someone got the wrong. I'm the one that's worse off, not you. I wish I could have that one. You know. Okay.
I've spearheaded the thing, and we're still working at it. Best thing for now is to tell myself and Monty which asset class you are looking at it, or financial instrument. We'll do our best. Monty does have, I'm going to quickly show up the Monty's book cover here, if you like. Those are the default ones that he always goes through for us every week. So just tell me which ones you're interested in, and then I will punch it up for you, and you can take a snapshot there. Bigger Bees, thank you for your question as well. Bigger Bees asking, what are your thoughts on more companies around the world creating Bitcoin treasuries and its effect on the price of Bitcoin? I'll try and answer that one first. We need to wrap up really quickly, so I'll make it short, and then maybe Monty can follow. I really don't think this is revolutionary, because many central banks out there, including the Bank of England, already had a unit more than 10 years back looking at their own crypto. Monty, what is your view?
Yeah, I mean, well, first off, by default, I do have Bitcoin and Ether, but not on this one, just because for the UK, I've removed the crypto ones, because we're not, I don't think we're allowed to discuss those ones there. But anyhow, when it comes to, I used to work for a crypto hedge fund, actually, before I joined IG. So it was a long only Ethereum one, and their thesis was that cryptos like Ethereum and the likes of Ethereum that have the capacity for smart contracts are going to outperform and break against Bitcoin, which is just used as store of value and not the best medium of exchange. They proved to be wrong, obviously, because Bitcoin just keeps on. I mean, Bitcoin is the gold within the crypto sphere. And I'm not saying that you should therefore invest it, but it is the gold within the crypto sphere, right? You look at gold, silver, platinum, palladium, the precious metals, or the cousins, as I call them. Silver, platinum, and palladium have more industrial uses, but yet gold is the one that has the name brand, right? When you think about going into precious, you don't think silver, you think gold right away. Within the crypto sphere, if you look at any investor that doesn't really know much about it, wants to dedicate 0.5 or 1%, not more than that, of their portfolio towards crypto, by default, it's always Bitcoin. And even when we were saying, oh, Ethereum, this, that, all that, they're like, well, actually, we're interested in Bitcoin, just because, we've heard about it, that's the one, that's the crypto major, that's what we'd like to do. So I think as long as it has that name brand, it will be able to do a little better, or at the very least, we'll see flows, as we've seen, as of like flows, even in weeks of outflows for other cryptos. Somehow Bitcoin still managed to get some of those inflows, because people still are thinking, okay, from a capital appreciation point of view and store value, that's the one. Sorry, I went over time.
No, that's wonderful. That's wonderful. I was just smiling because it was great stuff, but I have to wrap because I'm getting like -1 to wrap, -2 to wrap. Always a pleasure having you on, Monty. And next time we'll run you through that 4-way chart that you can easily put up on the IG platform.
I could have.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Welcome back to Market Measures. So let's dive straight in because we're looking at current market trends. Sahil's weekly update on what's happening. So in we dive. Right, let's look at the weekly performance of the S&P 500 last week, up 3%, the Russell up 4%, and the Dow up 3.7%. So big bounce back, bigger and better than the sell-off the week before. The expected moves, well, this week, the expected move is only 1.3%, which is surprising, considering what's going on. The actual move last week was 170 or 1.7, and the VIX at 19.5. Look how it's dropped off, 15.8, Ange.
Markets like certainty, you know?
They certainly do, and that was the big P&L opportunity last week, was being short your options on the Tasty platform, giving a big payoff on Wednesday as that vol collapsed. So expected range where we've actually ended up right in the middle, isn't it, of 6,000 level. So now do we start to look on the upside, 6,400, or the downside, 5,800? One standard deviation expected move gives us up or down 4.7%. So yeah, now down to, so 30 days from now, we're looking down to 5,711. Would you be comfortable selling that?
Yeah. What I would not be comfortable selling or buying, just because it looks so horrific at the moment, is I spoke to you about the NVIDIA expected move for the March contract. It was like up or down 20%.
Yeah. Which I would, I can't imagine NVIDIA down at 110. But right, look at those IVRs. The IVRs have dropped, as we said, major potential last week for P&Ls if you were short vol, because you can see everything dropped there apart from the one that we don't mention down the bottom. Significant market moves, interest rates, 10-year interest rate was up at that really scary level of 480, but it has come back now to in line where we were before. So yeah, 458. Then we're looking at Chris Beecham and I literally just speaking about the yen going into Friday. Beachy thinks it goes to 160. I think it goes to 152. So we're in the middle there, 155.5 at the moment. Remember, Friday is, well, overnight into Friday is the next Bank of Japan meeting. Now, top movers over the past week. What pops out to you there, Ange?
Ooh,
We've just been talking about it. There it is.
I'm just trying to put up the Intel expected move as we speak on the Tasty platform, just to look at the expected move, because you know this is incredible. It's been on a tear. We don't have a name yet, or did it happen whilst I was sleeping?
No.
No name yet.
No name.
No one knows.
With it being up another 4% this morning, maybe there is more meat to the bones there. But then, yeah, so I got a position in that. But also, you'll see the biggest loser last week was Lilly, down 4%. So Ivy ranks only 37% there. But yeah, Lilly down to 729. So Broadcom, I guess the other one interesting there, but still only in an IV rank of 27%.
Yeah, Palantir, look at that. Still 84%. Monkey Man, you'd be happy to know, I think it's Monkey Man, isn't it, that had Palantir last year, or was it Andrew McKilby? Well done you, plus 4%. I still think Palantir 2025 will be a good year for Palantir because it's just so ahead in its AI capability space.
Right, so numbers from last week. Where are those banks hitting it out of the park? Bank of America, the only loser there, and even that was only down 1%. But yeah, really impressive numbers from Citi, Morgan Stanley, BlackRock, Goldman's. So what do we have so far? 70 companies, and yeah, that's a tiny number there. But Ange, take us through the upcoming week.
So the big one that we've been talking about for so long is
Huge.
Netflix. And then we also have United. Netflix looking like it's going to be the expectation, might I add, is for impressive numbers. And then also we've got Alcoa. Obviously, those of you in who trade the mining space, that'd be a good one to watch out for. P&G, Johnson & Johnson in the consumer retail space, and of course Thursday we've got American Airlines, and on Friday American Express.
And don't forget the old Freeport McMoran for your copper names there as well. That's on Thursday pre-market. Magic, right, that was today's update from Sahil on current market trends. Who have you got after the break, Ange?
I have.
And where's he working from?
He'll be in here with me, isn't he? I saw him earlier.
That's right.
He'll be in with me.
Right, that's me done for the day. So good luck for our first day of the markets under the new President Musk regime. Best of luck. We'll see you after the break.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are four major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if the market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Hey, welcome to Confirm and Send. And as promised, we have Tom here with us. Tom, work from home, and Tom's takeover.
Yeah.
We have questions today specific to products, so I'm glad you're on.
Yes, thank goodness I'm here.
First of all, how is the boxing? You were going to put up maybe a boxing. We were talking about reset the last time.
Oh, yeah.
I play a piece on my Kemble piano, my beautiful Kemble piano, to reset.
Yeah.
Rich goes for a run, and you were talking about maybe installing a punching bag.
I was going to get a punching bag, wasn't I?
Yeah.
No, I just punch holes in the wall instead. No, I haven't set up the punching bag. I'd actually forgotten about that. But yeah, no, I should get back to that.
How are the renovations taking place in the Tom's mansion?
The roof is no longer leaking.
Good.
We've had the boys in.
Okay.
They've done an okay job. So
But it hasn't rained yet.
But it hasn't rained yet. You're right. So obviously it's not leaking. So we'll find out at first rain. We'll find out, won't we?
Okay.
If it's worked and whether I'm in a living room swimming pool or not.
Nice. What did they do? Was it slate or was it one of those plastic DPM fire?
They had a blowtorch.
Yeah.
They had a roll of plasticky looking stuff.
Yeah.
They blowtorched it.
Exactly. That's good.
Whatever that is.
It's good for a flat roof.
Is it? I hope so, because that's what they've done.
You got.
Yeah.
Speaking of which, tools on that vein, we've got some questions about FX type tools. Let's hit it up. Right, where can I find on the IG app or website how much FX fees I need to pay when I buy international stocks?
So if you're buying stocks that are in a currency that isn't the currency of your account, so let's say you're in the UK like we are and you want to buy stocks listed in a different currency, like for example US stocks, there is an FX fee. So the question is, how do you find it? Well, two ways. First is on the platform. So if we bring up my screen, let's say you were trading a US stock. If we bring it up, if that's all right. Let's say Tesla, for example. Let's say you bring up Tesla. I'm on my share dealing account here, and that's crucial. So what we're doing here is we're actually buying the underlying stock rather than trading it on a spread bet or a CFD. If I go to buy this stock, if I put in my quantity, we're putting in an order here. So I'll need to set an order level to the price that I want to pay. And what we'll see here is, we'll see that there's no charges. We'll see the total cost in pounds. And you'll see here that what's been applied here is an FX fee of 0.5%. So that shows it just down here. So that is the fee for the fact that you have sterling in your account, but you're buying a stock that is a US stock that is in dollars. So you pay that 0.5% FX fee. And if we click learn more, we'll just see, you see a little description that just explains what it is you're doing and the fact that because your account is in sterling, but you're buying US stock, you're going to pay a 0.5% conversion fee. That's one way. The other is, if you were to go to the IG website, now let's see on the IG website, up along the top, if you go to invest and you go to IG invest, you're going to see this page, and this has a breakdown, if we scroll down, of our costs. So down here we can see that you have, if you're in the UK, you're obviously not paying a Forex conversion fee because you already have pounds. But if you're buying US shares, European shares, Australian shares, you can see that 0.5% FX fee, and you can see that there's no commission on US shares, European shares, and Australian shares. That makes sense.
Nice, and I've put that on the chat as well. So trader friends, if you search up what you'll pay and what you won't with IG, you'll get that page. So thank you very much. That was perfect. That was a question, a very good question actually, from RSAX, one of our clients here at IG. And all of our trader friends are also saying, amazing, thank you so much for the information, especially that website. I didn't know that we had that. It's like almost like embedded right at the bottom, isn't it? Scroll all the way down. I knew where it was on the IG platform.
Yeah, but if you wanted a breakdown of across the different shares type, yeah, that's where the information is. It's a new little part of the website because we've got the IG Invest app now, which is a new app. So we've got the standard mobile app, like if you're on your phone, where you can trade your spread bets and your CFDs. But we've got the new Invest app, so you would equally be able to see the fees if you were using that as well.
Nice.
Yep, there you go.
All in one place. I'm going to put, our Saxena says fees, so I'm going to put that link down there as well. RSAX on my chart, if you can whack up the comments here so that we can see it. RSAX saying it is not showing the exchange rate I'm paying. FX freeze on top. Am I correct?
So what if you'll see the total cost. If we bring up here, what we'll see is once you put in your order and your size and your price, what you'll see is you'll see the breakdown. So you'll see that this is the total cost you will pay in pounds. And if you wanted to see exactly how it was broken down, you can do so here. So if we're looking at this, if we're saying, if you're buying 10 shares of PepsiCo, let's say, and if the exchange rate was 1.4 and the price is $150, you would pay your 10 shares times the price of the share times the FX conversion fee of 0.5%, which would bring you out to your total. So that's your conversion fee there. So that's the breakdown. So if you wanted to see the breakdown, you can click this little learn more button here at the bottom. But what you can see is this here in pounds, that is your total cost.
Another good question from Bigger Bees. Can I move multiple currencies into my IG Australia account to prevent paying these FX fees?
Can I move multiple currencies into my IG Australia account to prevent paying these FX fees? So I don't know the ins and outs of that, but if you're having difficulty with it, the best way would be to, if you give us a ring, someone will be able to, because I don't know the exact details of that.
Nice. So that's a good session on fees. Let's hit up the next question. Who is making the market outside of traditional US market sessions for all session stocks?
So in the US, they have the main market, which is for us between 2:30 and 9 UK time. But in the US, you also have a pre-market and you have a post-market. So you can actually trade US stocks either side of the main market. Now, we have a number of stocks on the IG platform.
So just to quantify this for our clients, so
Yeah.
all session starts at 9.
Yeah, well, I've got a little diagram. If we bring up my screen, I'm a visual learner. You know, I like to have a nice little picture. So what we can see here is this little grey box here shows that normal US trading hours in the UK are between 2:30 and 9 p.m. That is your main market. That's when the New York Stock Exchange, the NASDAQ, that's when they have their main session. That's your normal trade. That's when the most volume of trades goes through. Now, there is also, if you're share dealing, you can trade between midday UK and 10:30 or 10 p.m. on a Friday. And if you're trading on leverage, so CFD or spread bets, you can trade our all session stocks from 9 o'clock in the morning through until 1 a.m. The reason you can do that is because the US has this pre-market and post-market. So these are extended sessions. Things to know about these sessions are there's often more volatility and there's also potentially less. Yeah, you like that?
I like that.
There's also potentially less liquidity, right? Because most participants are operating in the main session.
Exactly. And what I would say with that volatility, if you like volatility, I try as much as I can not to leave the screen, because you need to have your wits about you. If you do, then make sure you have strict guardrails in place. But I almost keep my eyes on the screen the whole time.
Yeah, if you're trading in the pre-market and the post-market, you mean?
Yeah.
Yeah.
Because it's more volatile. But also, Bigger B's asking, there's a new overnight market now too, 8 p.m. to 3:50 a.m. Is that something you've heard of?
So we currently only offer between 9 a.m. and 1 a.m. That's as far as our session goes. Is there a potential to extend that? I think there might be. But right now, that's how it stands, 9 a.m. To 1 a.m.
Cool. RSXana is saying thank you very much for the explainer and fees. It would be great if it shows the calculation on that particular stock there. Thanks.
Oh, okay.
We'll bear that in mind and take that to the developers. Right. RSX is on fire. It says, I don't have a record of FX pay to calculate my actual cost. Forgive me for so many questions. There are never too many questions. You should hear my podcast with Chris and Aaron Bright yesterday. This is what we're here for. What I love about this show is that we help each other out, because there are no silly questions, no too many questions.
Who's helping the other one more? Do you reckon you're helping the viewers more? Do you reckon the viewers are helping you more?
Well, both ways.
It's just both ways.
Both ways. And also, I'd like to think I'm helping you in the DIY space.
It's a three-way kind
It
of
is.
helping triangle.
This is what I love about this space. No, not too many questions. We will try and get that answered the next time we're on. But that's also really handy for, we've had loads of trader friends asking us here, especially with the launch of our new Tasty product, how can they get money into the account here and vice versa without incurring charges? Is there a way around it? Is there a specific product on the IG platform that you can use rather than going through banks? Mm-hmm. Another cool question that we were asked recently that we were looking into is, can we stock screen ETFs?
Yeah.
And so we are working on that. And any updates so far?
It's in development. We're cracking the whip,
Wow.
We're out as quickly as possible. So just to round off the out of hours trading, so we can look at a few, because we've just released some more all session stocks, 30 new ones. So here we go. So I've just highlighted a few here. So these are a few stocks that are now all sessions that weren't before yesterday. So these have now opened up, so you can trade these now from 9 a.m. until 1 a.m. Now, what you'll see is I'm on the share dealing platform here, which is why you can see there's only deal here and no order. So what we've got is, if I was putting in an order here, you'll see here you've got your expiry. So you'll notice that there's a difference here between your day limit and your day all sessions. So you can just be trading as part of the main session, or you can be trading as part of the extended session. So we've got Salesforce, Chipotle, Dell, Lululemon. Those are a few of the ones that have moved into all sessions. So when you're looking through shares, you'll notice that some say all sessions, and your big names have been all sessions for a while. But these ones have just become all sessions, and it's something to take note of, because if you are trading them, you've got to bear in mind that they are trading all the way through the main market and the post.
And for those of you that have watch lists, like myself as well, bear in mind that you're going to have to rejig your watch list to add or take away some of these all session stocks, or indeed you might want them together. So for example, I'm going to punch up my quantum watch list here. For example, INQ is now an all session stock, and you'll find that many of these stocks, a bit like sheep, right? They move together. So I like keeping this one in particular together, because if INQ is moving lower, it is indeed right now down more than 6%, then the likelihood is that its pals that are not all sessions, when the main cash session opens, they're likely to move lower as well. So it's almost like a heads up display in your car, which I didn't buy because it was an extra £1,000.
Good call. But yeah, the benefit of trading pre and post market is if there's earnings, or if there's announcements outside of the main market, that's when you can react to that news
exactly
at that time, rather than having to wait for the main session to open.
Or for example, if you hear Musk or Trump say something wild, right? Let's say midnight or sometime, which we don't offer in those hours, but you know that some all sessions will react to it, then you can get to it faster than waiting for when the cash session opens. So it's good to bear in mind. I'm glad you pointed that out, because now I have to, after the show, I need to add the new 30 to my all sessions watch list, because I haven't yet.
Yes, a little bit of admin for you. And just quickly before we go, I saw this chart on the website, which I think is quite interesting. This is the proportion of trades over their respective earning days in each of the sessions. So you can see for each of these large stocks, on their earnings days, you can see how much of the number of trades were in the pre and post market. So the main market is this white section here. So you can see you've got a lot trading in this here, which is post. So you've got a lot more activity on earnings days happening outside of that main session, which I think is something quite interesting and worth noting.
Great. That was very useful. Thank you very much, Tom's Tools. There'll be plenty of questions which will be funneling your way.
Excellent. Can't wait for questions.
Do let us know what happens to the roof when rain is expected on Wednesday, 85% chance.
Is that right?
Yeah. As of last
Oh, we're in big trouble, I think.
So let us know
We're in big trouble.
how it goes.
There'll be umbrellas inside, I think.
Which room is affected?
Just the entire lower floor, just the entire ground floor, really.
The entire ground floor. Fixing roofs is really tricky and annoying business, because they have to like wait for a clear consecutive days, right, of no rain expected, because they can't.
We got lucky with that, but I'm hoping that they get up there and they can just unleash a torrential downpour of hose pipes and paddling pools and whatever they can find to test it before they go home. That's what I'm kind of pushing for.
Yeah. Do update us when you come back again. We will stay right there. We'll be right back, and Richie Rich will be joining me. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Hello and welcome to Technically Speaking. Before I answer questions, what I would like to do is, first of all, do our educational segment. And today we'll look at the definition of technical analysis. What is technical analysis? Basically, it's a method of forecasting future price action in financial markets by evaluating historic prices and, if possible, also volume data. And the idea, the basic premise is that technical analysts believe that market action discounts everything. That means that All that is possibly known in the financial markets, or can be known, is basically in the price of an asset already. And what it also does is that basically technical analysts don't care why a price is moving. What they do care about is whether the price is moving in a trending fashion or not, and whether that trending action is likely to continue and not. And they're not interested, therefore, in value. And as we saw last week, fundamental analysts are interested in value, and technical analysts are interested in the price alone. So they don't care about value per se. And what technical analysis does, it looks at basically, as I said, market trends and wants to see whether these trends continue or not. And you can look at different chart patterns, you can look at indicators, you can look at moving averages, at all kinds of different oscillators and different techniques in order to gauge whether a trend is relatively new and is likely to continue, or whether it's coming to its end stage. So this is really what technical analysis is all about. It's about analyzing price action and trying to make that analysis as clear as possible. And it also helps to reduce your risk if you use it correctly, because you can gauge from the market price action in the past where good entry levels are, where you can place your stop losses, and what potential targets might come in. If you have any questions about technical analysis, please ask these now and I'll answer them later. But let's go straight into what we just discussed in Trade of the Week. And as I said, the pattern we saw in the Tesla share price is the same. You could have traded this morning, for example, on a 5-minute DAX chart. So I'll just show you this very clearly here. We did an ABC correction, didn't we, in the Tesla share price on Trade of the Week on the first week of January. So we have this decline from the high, wave A down, wave B up, wave C down. So it's A, B, C. And they are almost in, or quite often in, similar lengths, sometimes a bit longer, the C waves, etc. But basically A, B, C, you've got this zigzag pattern. Then you get a bullish candle, a break above the bullish candle. That's our buy signal. That's why we went long the Tesla share price. And you place your stop loss below the last low. Now, this pattern only works about half of the time, as I said before. But if you trade it in the direction of the overall trend, which for Tesla is up, then if the trend continues, you would expect a new high to be made. And as you can see here, the risk from the entry price to the low is comparatively smaller than if the Tesla share price makes a new high. So from a risk-reward point of view, this setup makes sense. Even if it's only right half of the time, when you do get it right, you tend to get 3, 4, 5, or even higher reward compared to your risk. Now, can you see this pattern? Down, up, down. Now look at this morning's chart. Now obviously you need to get up early like I do to see some of these, but they creep up during the day as well. This was at 6 o'clock in the morning. That was the high on the DAX on the 5-minute chart. We have wave A down, B up, and then C down. So you can see the same zigzag pattern. It's a much smaller one, but it's still up, down, up, down. Then we have this hammer, and then you basically go long here at 20,890 on the daily financial bet. You place your stop loss just below the low here at 20,000, where was it, 800 and, let me just click on the chart. It was just down here, 20,889, let's say. And then you would expect it to make a new high above that high. It took a while, so that was between 6 and 6:40 this morning. Buy signal, small stop, nearly got stopped out several times, but then the market opened here at 8 o'clock, went straight up, made a new high, and you could have had a 5-to-1 risk reward, but it actually came off again. But even if you just moved your stop to your last relative low of each of these bars, you would have had a trade, as you can see here. That's your profit. This is the initial risk, which would have been 3 to 3.5 times bigger than your initial risk. So the pattern clearly worked. We also had questions to do with the DAX, so maybe I need to change here to a daily chart and answer your questions. But you can see here the DAX is heading higher. Let me just delete all these lines to make it clearer for you. And you can see that at the moment we're still heading higher. I mean, we're clearly trading at all-time highs. Last week we had 3 record highs in a row. And I've got a question here to do with the DAX from Donald Omekye. I hope I pronounce your name correctly. But the question is, and I'm just reading it out here, as the DAX uses a free float methodology to calculate its weightings, what market conditions do we need to see for the DAX to fall? Well, quite honestly, it doesn't really matter how the DAX is calculated. Obviously, if the constituents of the DAX 40, so the 40 companies in the DAX, have disappointing earnings, or if the German economy heads back into recession, or if inflation in Germany were to rise very significantly and the European Central Bank maybe therefore doesn't cut rates as quickly as we are hoping, any of these factors could perhaps lead to the DAX coming off. But the fact that it is free float calculated doesn't come into the equation really. It's more a question of what the price action of the DAX does, or what the underlying DAX does with regards to the corporate earnings and the macroeconomic background. It could be also what Trump will say later on today, or the decrees he signs today. They could have an impact on financial markets, because if, for example, taxes on European car makers are much higher than we are expecting them to be, or tariffs, I should say, not taxes, then the DAX might come off quite significantly based on that. Now, for those investors or traders out there who are short the DAX, my question to you is very much, why are you short? Because the price action is clearly going higher. We always try as human beings to think, oh, it can't go any higher, and therefore we want to short it. We want to catch the top or the bottom. Believe you me, I've been doing this for 30 years. It's a very dangerous thing to do. If you want to counter the trend and trade against it, you need very specific setups. And even then, most of the time they don't work. And if they do, they can be very profitable. But you need to know a lot about the financial markets before you can try these sort of setups. But don't sell into something simply because it's making new record highs. There is a reason why these markets make record highs. And the reason is there is a momentum behind these moves which drives these stocks higher. For example, last week, why did we see all-time highs in the FTSE 100, in the DAX 40, in other European markets nearly, or even in the CAC, the CAC having lots of issues and last year being down on the year, actually rallying now as well? Well, because a lot of the fund managers at the beginning of the year rotated out of US stocks, especially highly overvalued on PE ratio basis, etc. Magnificent Seven stocks, NASDAQ stocks, technology stocks, into what they consider to be safer European undervalued stocks, which have much lower PE ratio, especially in the FTSE 100. And that has led to the rally we saw last week in the stock indices. So why would you want to short that unless you do that on an extremely short-term time frame? But even then, the trend is your friend. Try to use a technique where you buy on a retracement in the direction of the trend. And that's what we did today on Trade of the Week. We are trying to buy on a minor retracement in the S&P 500 for a new all-time high to be hit eventually at some stage. And we have our stop very clearly in place. So we're trying to go with the trend, not against the trend. Anyway, let's answer some more questions. I've got another question here from another viewer asking me, it would be interesting to see if you could analyze the DAX and compare it with the CAC for signals this AM. Well, if you look at the CAC 40, the French stock index, so this is the daily DAX chart. If we just do here the CAC 40, let's just put it on there. We can see that the CAC 40 looks very similar on the chart, except if you go back in time, this is what happened to the CAC since April of last year, whereas the DAX made new all-time highs. But basically, you can see the pattern since the beginning of this year is very similar. So if you overlay the two, they look pretty similar. And you asked here the question, what happened intraday? Well, intraday, if you look at the 5-minute chart of the CAC, we don't have the same pattern. We have a pattern down. Well, we do. But this one, for example, the ABC, went down, up, down, then back up again, then down. If you thought this was a buy signal here, if you had gone long, this leg here is much shorter than that one. So maybe I wouldn't have looked at that, but because I wanted to be at least the same length or more or less that same length, which would have been the case here. But because of this pattern here, it's no longer sort of just an ABC zigzag pattern. Had you traded it though, thinking that this was an ABC, that would have been your entry level. This would have been your stop loss, and you would have been stop lost. Fine, you lost some money on the trade, but you lost very little. But had it paid off like it did on the DAX, you could have made a lot. And that's what trading is all about. So right now, what can we see? Well, we see failure at previous highs, market coming back down again, retesting previous lows, falling through support, the early 8 o'clock low, marginally, but not closing below there. So if you want to go long, well, you know where your stop loss is. It's down here below the low, because that's the lowest point of the day so far. If you're right, we might get mean reversal trades coming back and taking us back towards this high, and maybe you can sell back into it again. If you think that was the high you want to go short, you have to ask yourself, fine, if I'm going short here now at 7,720, my stop is above these highs, let's say 7,442, so 22 points. I want to see at least a, let's say, 2-to-1 risk-reward ratio. So I would have to see a fall about 44 points. How far would that take us? Well, that would take us to below the low seen on Friday and to below all these support areas here. So that's pretty unlikely to happen because the US markets are shut today. We've got Trump inauguration, and unless we see what he's going to do with his decrees later on today, I don't think we'll see a lot of volatility in the market. But can you also see here, we have the same ABC pattern I just mentioned before here at the beginning on Friday, and that one did actually work. So yeah, just analyze your markets the way you want them to. Anyway, another question I've got here on the oil chart, because I've got to wrap up soon. And the question is, can you please have a look at Japan? Oh no, actually it's not oil, sorry, it's Ollie Oil, your name. Let's look at oil in that case. No, Nikkei 225. So what does the Nikkei do? Well, you can see the Nikkei here basically is holding around support. You can see it's just holding above the January low. This is on the 5-minute chart, but I need to go on the daily chart because I'm sure you're looking at the daily chart. But can you see here we're just holding above that low here from Friday. And that low was made marginally above this key support area here, where all the lows between mid-November and late November were made. Now that acts as a pretty big support area. And if you want to take a wider stance, well, you've got the lows going back to September and also late September and October. So we've got a lot of support going all the way down towards 37,265. And if you want to go long here, that could potentially be an ABC pattern I just talked about. But if you wanted to trade that pattern, if it is indeed a zigzag down, so A, B, C down, then where's the lowest point of that C? That's Friday's low. So if you want to go low on that pattern, you would do so with a stop loss below that low, and you would have an upside target probably around these highs where the previous resistance is and where the previous highs are. And that, from a risk-reward point of view, would be a good trade. If you wanted to go short the Nikkei 225, well, where's your stop loss? If you have a tight stop, it would be the high from Tuesday of last week, because that's the last reaction high. A reaction high is simply a high which is higher than the one to the left and to the right. And if you want a wider stop, where's the widest stop? Well, the last reaction high above that, which are these highs here, and you might as well just go to the next higher high. In that case, though, can you see if you're short here, your risk is all the way up here. So that's a huge distance. The Nikkei would have to fall for you to be right. And that means it would have to fall below these key support areas. So maybe going short the Nikkei 225 is not a good risk-reward setup, and maybe going long with a stop loss below Friday's low is a more sensible approach if you look at that pattern. But as I said before, this ABC pattern only works half of the time. But let's talk more about it next time. Please keep sending your questions in, and I look forward to seeing you next week. Goodbye.
Welcome back to Market Measures. So if you trade Tesla, if you trade gold, JP Morgan or Goldman's, this is a special Market Measures for you, because we're looking at what happens to stock market around Trump's inauguration day. So Hale's been through all the details, and this is a cracker. So
excited.
Trump will be officially inaugurated as president this upcoming Monday. As such, traders will seek fresh opportunities in the market that arise with the change in leadership. This Market Measures will go over the numbers and trends surrounding that inauguration day, as well as the previous one back in January 17. Now, what opportunities can you look for in the upcoming week? So we're looking at the 3 days before and the 4 days after. So since the launch of the S&P 500 in 1957, US stocks have generally not performed well on inauguration day of a new president. But on the day Trump took office in 2017, all three indices rose by a significant percentage, marking a significant deviation from the trend. Now, there's the different sector ETFs in the days surrounding that inauguration in 2017. So you can see the underperformer was healthcare, boring defensives, and the outperformer, consumer staples, actually.
Interesting. Ahead of tech.
Yeah. Yeah. Now, there you go, and there's your stock market trends surrounding those inauguration day. Do you want to run through the big winners from the first few months?
Thank you so much, Sahil. I have been waiting with bated breath for this piece of analysis for myself and Rich, because I thought no one's really done this, and we can get a whole team, the wonderful research team at Tasty, led by Sahil, to do this. So Align Tech was the biggest gainer, 150, almost 154% there, if you round it up. Micron, more than 90%. Boeing, also up near that 90 mark. Nvidia too, behind.
Before anybody really knew what Nvidia even was.
Oh, well, I did, but you know, the geek in me going, yeah. PayPal, 80, almost 82%. Wynn Resorts, those of you that look at this space, 80%. Of course, Trump has talked about deregulation for some time. Vertex, one that I'm not very familiar with. D.R. Horton, house builders, 76%. And Red Hat, that one I know. They build drones.
Right.
And they are one of the key stocks I'm looking at the moment, because their USP is that their drones are modular, and they have recently cut a deal with Palantir. Palantir supplies them with software that gets their drones the eyesight that they need.
Yes, brilliant. Right, what about the losers? Healthcare and energy stocks performed the worst during the first few months of Trump being in office. So you can see Hewlett-Packard there, GE, Under Armour. I mean, I think just Under Armour was going through a terrible time there anyway after overspending on marketing. Mattel, the toy maker, Baker Hughes, and Range Resources. Now, what about gold, right? This is the really interesting one. Following the election, gold dropped from record highs but rebounded to 2,650. Policies of tariffs, spending, and tax cuts may potentially strengthen the dollar and weaken gold. I mean, can it strengthen the dollar anymore? That's the big question. But increased global uncertainty could definitely boost demand for the metal. Despite expectations that higher rates would lower gold prices, it's reached record highs, possibly due to concerns there about the debt stability. So there you go with the expected move, 252 down to 241, 2.2%, 7-day is the standard deviation. Now, during his campaign, Trump pledged to boost the economy and suppress inflation by increasing oil and gas drilling. Drill, baby, drill, potentially allowing an additional 3 million barrels per day on federal lands, despite skepticism from Exxon's upstream president. Although the US is already the world's largest oil producer, this increased supply could lower prices. So then you've got to start measuring that against Middle East conflicts and also the OPEC actions as well. So yeah, expected standard deviation of 7% in UNG, and in USO, we're looking 5% on the 7-day. So yeah, some really interesting opportunities there around the energy complex. Now, Ange, do you want to take us through this one?
Nice. And leading US financial institutions, this is a key one because we're on the cusp of the earnings season, may gain an advantage from what is expected to be looser regulation a la Musk and more beneficial tax policy after Trump's victory. Indeed, shares in JP Morgan, Wells Fargo, and Goldman Sachs, among others, all posted strong gains on election results day. I remember this as well. There was a great confidence
around there. However, in the days surrounding the 2017 inauguration day, the three major bank stocks all went down, although not by much.
Right, takeaways. So Tesla have surged post-election. President Musk, now head of the Department of Government Efficiency, in a powerful role. Keep an eye on SpaceX, potentially IPO bound. Now that's going to be a cracker of an IPO. Consider cryptos like Coinbase, so the stocks relative to crypto that might thrive under those new crypto-friendly administration. The gold price dynamics have defied expectations despite economic shifts. So what's going to happen in that first 100 days with Ukraine and Russia? That is going to be critical. Peace deal might redefine commodities, benefiting companies like Ferexpo and Bank of Georgia. That's not one that we look at.
But Andrew McKelvey for Expo.
Exactly. Trump's victory may ease banking regulations, boosting stocks like JP Morgan and Goldman's, even as defense spending could be scrutinized. So Trump, of course, may have to cut defense spending or at least hold it while trying to talk Europe into increasing theirs. US-China trade hit records despite tensions, suggesting future opportunities for resource companies outside China. So an incredible work from Sahil there. Today's market measures. Let's look back at that one next week and remind you on Monday when the US is shut, remember, and we've got that inauguration about to take place. Now, speaking about important American things, Ange, what have you got coming up after the break?
Very important. More important than inauguration. We've got the one, the only JJ Kenahan, head of IG North America, coming up right after this. So stay where you are.
The data is out. We've seen inflation, we've seen retail sales. That was supposed to be the big set of drivers for the week. So what do markets have to show for it? That's what we're going to talk about here today on Macro Money. I'm Ilya Spivak, head of Global Macro at tastylive. And what we are going to do here is essentially unpick why this data was so important, what it told us versus what it didn't, and what the markets have actually done in its wake, because that part of the story is perhaps the most actionable and the most speaking of what the trade in all of this is going to be. So let's quickly review. We came into this week with this having been last week's performance. Obviously, we can very readily catch the theme, so we're not going to spend too much time on it reviewing, but we can see here stocks had an awful week last week, down over 2% apiece on the S&P and the NASDAQ, and it's because yields surged. The 10-year up 3.5%, the 2-year up 2.3%. Those are not the quotes on the yields. Those are how much those yields moved. So that's obviously a significant jump. Dollar strengthened against both euro and yen, its main counterparts. And all of that is in the wake of strong U.S. economic data, signaling to the Federal Reserve that there is less cutting to do, at least as far as the markets were speculating. And so yields shot higher, stocks came down, as it seemed like the Fed would have to adjust even further, having watered down their Fed rate cut outlook already in December. We'll take a look at that momentarily here. So this is what we started with this week. This was the stage setting. Earlier in the week, we had U.S. PPI data, which was the first kind of batch of numbers. That one was relatively minor. But when that came in just a touch softer than expected, stocks briefly popped higher, although they ultimately didn't make much hay of it one way or another. And that suggested that the dynamic that we see on this graphic here, that held up. That is to say, the markets want more rate cuts, and they are unhappy with news that suggests they're not going to get them. So that's the stage setting, and that's how we started this week in price action. How did we do on the big data releases that were supposed to be watershed moments for the markets? Well, the first one, of course, US CPI. We can see here headline came in exactly as expected, 2.9% year on year. But we did get some favorable twitching at the core, 3.2% year on year, which is, needless to say, better than the 3.3% expected, and actually quite a significant milestone, albeit just 1 month. But this is actually the first time that core inflation has come down since September. The year-on-year rate came down from 3.2 to 3.3 August to September, and then for 3 consecutive months idled at 3.3%. So this is a bit of progress here. If we look at the breakdown, moreover, it is suggesting that we have the inflation occurring in an area where the Fed cares about it less, and the disinflation occurring in the area where the Fed cares about it more. So we can see the downswing really comes from the core side of things, and where you get the positive inflation is in energy. Now, of course, the reason that the Fed primarily looks at core readings is because, first of all, it has no agency over global energy and food prices. And of course, secondly, as we just saw from this chart right here, all of the inflation currently lives in the service sector. So although here the contributions from goods and from food and certainly from energy are higher month on month, so they are more significant here than they were in the prior month, which is how you read this chart. The contribution from energy, for example, was still negative overall. It's just in November, it was negative 21 basis points of a overall contribution to the headline number, whereas in December, it was just 4 basis points. Similarly for food, similarly for energy, or similarly for goods, rather. Goods still a negative contributor overall, 10 basis points, just less so than the prior month, which is how you see that slight uptick here. So the news favorable generally for if you're the Fed and certainly if you're the markets and you've been wanting reasons to worry less about yields. This suggests that the Fed is, in fact, seeing the things that it wants to be seeing. And so with that in mind, stocks roar higher when this happens. Bonds jump higher when this happens. Yields pull in. If we look at the internals of this report, we get some pretty favorable little tidbits as well. Now, obviously, this is here the month-on-month rise in headline CPI, but we can see the core is lower. And in fact, this is the first downtick in core since back here. So, and the lowest that we've seen since basically July. This is the first time that we actually go negative on core. You can see this is a significant sort of difference in how this is lining up. So on the whole, encouraging. Moreover, if you look at these frequency measures, the 3-month annualized and 6-month annualized, this is what the Fed looks at to get a sense of nearer term dynamics. We can see that the 3-month headline And the 6-month headline, they're still rising. These bars are getting higher, and in December, they got higher than the prior month. But you're starting to see, very helpfully, a turn in the 3-month core annualized. So the yellow bars seem to have found a peak and have started to tick lower. It's not showing up in the 6-month numbers yet because, of course, they're more smoothed out and that effect isn't there. But this is an important step in the right direction, it would seem, in the trajectory of core inflation, which seems to have been rising since July, kind of stalled October into November, and now has started to tick lower. So all of this is encouraging. And it makes sense why stocks rallied on that. It made sense why bonds rose. It made sense why the US dollar weakened a bit as its yield support waned somewhat. It was more encouraging news on retail sales. So the expectation was a 0.5% increase. It ended up being a 0.4% increase. Not a huge difference and not a major adjustment, but nevertheless, this looks less like something screaming for the Fed to abandon rate cuts than something that calls for hawkishness. So when you look at this on balance, if the risk was going to be that this would beckon the Fed to action, much like ISM and NFP did last week, and indeed consumer confidence numbers as well, if you thought those things were scary because they would mean the Fed would abandon the cutting cycle altogether or some version of that, then these are not numbers that point in that direction, and helpfully this is event risk out of the way, which could have shown those things and didn't. And that should be encouraging. When we look at the year-on-year story here, we find that, yeah, there's a little bit of a down tick overall, but this is not the kind of weakness in retail sales. Obviously, at some point, you look at a downtick in retail sales and you say, okay, well, this is overwhelmingly the growth engine for the U.S. economy, household consumption. And so you don't want it to fall too far. You just don't want the Fed to abandon rate cuts. You don't want to see retail sales crater. That would be a whole set of new concerns. And here you can see that that isn't what's going on. In fact, things have been relatively steady basically since the middle of 2023. You've wiggled this way and that, but on the whole, things are stable and remain so. So what does that mean? Well, if we take a look at the way that Fed policy expectations have evolved, we can see that they haven't really changed much. In the onset of the hawkish repricing that we've seen playing out in markets since the Fed issued its 50 basis point rate cut in September, sort of in the context of those moves, what we find here is that we had the adjustment occur. Here's the September curve where the Fed said 100 basis points in cuts in 2024 and the same in 2025. And here's 50 basis points up front. This was obviously very, very dovish until the Fed started to look to markets like it was too dovish, which happened virtually in tandem. The market looked at this and said, okay, wait a second. We know that we've been calling for you to start cutting rates, but this is a lot, and the economy isn't nearly cool enough to justify all of those kinds of things. Not to mention, we're about to get a new administration in the White House with a set of policies that generally, in isolation, obviously we'll see how they work together, but in isolation are all inflationary. Boosting growth through tax cuts and deregulation, yes, is good for growth, but also more growth is inflationary. Tariffs are essentially a sales tax on imports. That's inflationary. disrupting labor markets and altering the supply of labor with any kind of deportation effort as a means of immigration stance adjustment. If that were to increase the price of labor, it would also increase the price of manufacturing or just generally doing virtually anything. That's inflationary. You can have any which debate on whether these things are good, bad, indifferent. For our purposes in looking at how the Fed is going to respond to these things, we just look at this as an inflation catalyst. And so it isn't surprising that when the Fed gets very dovish in September, as it becomes increasingly likely that we're going to get another Trump administration, as the markets figure, well, the economy is already warming up after a more lackluster middle of the year, and we're getting this very dovish Fed at the time that the economy is warming up, and the new administration's fiscal policies are likely to favor a more inflationary bias. The Fed is probably overestimating how much easing it's going to do, reprice that. And that's what we watch here from September already by November. Notice the Fed meeting is immediately after the election. The election's on the 6th, the Fed meeting's on the 7th. Already by then, the meat of this adjustment has occurred. And so now the markets are looking toward rates at the end of this year closer to 4%, whereas in September it was sub 3. So note how much actual change has occurred in this entire situation since November. The Fed adjusted its summary of economic projections in December, but there's no real difference. There's no major change between November and December. By then, the move has already occurred. And now that we look at the curve in the wake of both last week and this week's data, and it's not much different. At this point, there is a rate cut from here to here. So that's about one cut. And then we get to the approach of another one toward the end of the year. So if we look at the overall tally now, we have 41 basis points for this year and 16 basis points for next year. Cumulatively, that's 57 basis points. And you can see here this wiggle in the orange curve here, where last week we went higher, and this week we almost fully erased that higher. So we're back to essentially where we were 2 weeks ago. Not a whole lot of change. Now, the markets, of course, were reactive to CPI as it happened, but this is still quite a bit more hawkish than the Fed's own outlook. Here's that summary of economic projections from the Fed's December meeting. This is the baseline against which we are pushing off. And we can see here, they obviously deliver on the 100 basis points for last year. We have 50 basis points that's now being baked in from 4.4 to 3.9 this year, and another 50 basis points for 2026 down to 3.4. So 50 and 50, that's 100 basis points this year. And next, the markets are close to half that because next year has almost no easing. The likelihood of even a single cut is suspect. And so what's interesting then is the markets have taken heart in this CPI number, and it seemingly had all of the effects that one might expect, except it hasn't really given equities nearly the boost that one might have thought it would, given last week's pain that equities succumbed when things were going in the other direction. So if we take a look here, we can see bonds understandably reflecting the revision on the outlook here. So we had more cuts back on the table as we got this move in the tally for this year, back closer to 2 cuts. Not surprisingly, bonds go up. This is the long bond right here, comes off its low and starts to essentially reset to where it was at the start of the year. Note, all of the early moves here essentially erased in a day, or early moves for 2025 over the course of yesterday. And today, with those retail sales numbers coming in a little bit softer, we get bonds continuing to rise, yields continuing to correct lower. It's a similar story for the US dollar. It has continued to correct lower through this period as its yield backdrop improves. It seems to be starting to move into a better direction. But then we look at what is going on with stocks. And this is where things start to look a little bit more questionable. Because here, obviously, we have a massive rally yesterday. That much is clear. There it is. But as we continue to see progress on the dollar, as we continue to see progress on yields, that is to say, yields are pulling in, bonds are going higher, stocks can't make hay of it. The S&P 500 stuck at the bound of the lower highs, lower lows trajectory here, basically carved out since the beginning of December. Moreover, we can see that the uptrend from August is broken. So how much of a massive decline this is? Well, it's not that massive. We're just kind of inching downward. But the real story here seems to be that even as retail sales went in the direction that the markets ostensibly wanted, even as we got yields to come in more, the dollar to come in more, stocks could not take lasting comfort in a less hawkish sort of Fed view. And that is asymmetrically negative, just in terms of what we've seen already. Because if the markets are going to sell off on a hawkish Fed, at least as far as expectations shift, but then can't rally on a less hawkish Fed, well, then that seems to suggest a bias. It seems to suggest the markets are facing some sort of underlying heaviness that's pulling them lower, whereby they're finding reasons to sell off, but then when those reasons invert, that's not good enough to rally in earnest. And of course, they rallied yesterday. That much is clear. But bonds kept going, the dollar kept going, the data kept looking right, and they couldn't do it for another day. This seems to imply that perhaps something more sinister is brewing in equity markets, and with a lull in U.S. economic data over the next week or so, and the path of that data anchored basically to zero relative to expectations. That is to say, we're starting to see data basically trued up to where analysts' models suspect the economy is. Now it's just a matter of sentiment. And if sentiment can't get this market to rally even under these circumstances, then it may be weak indeed. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm on with Chris for Futures Power Hour Mondays and Fridays, Victor Jones for The Price of Truth on Tuesdays, back with Victor and Tom for First Call on Sundays, writing for the news and insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter and Blue Sky. If you're watching on YouTube, like and subscribe. Thanks for watching. Macro Money's back next week.
Hello, everybody. We're back. It is Wednesday, 1 p.m., and we're in the middle of January. Dylan, as you just mentioned to me, this is going to be our last show before the end of democracy.
It's a big deal.
It's a big deal.
Market. Last time you'll have a Fed rate that's not controlled by the President of the United States.
There you go.
Again,
we got a nice little
independent Fed.
We got a nice little rally going today in the bond, so I don't want to mess anything up here because
remain calm.
I needed this just to kick things off because it's been a
while.
It's been a dark road down the bond path. So finally getting a 1.5 move to the upside is.
So do you think that means something because it's another day, 2 days now where you have a different thing happening? Do you think that's relevant to the Trump cycle and all this?
No, I don't think. I think this is just a crazy, one of the most oversold markets, the bond market, and to a certain extent, U.S. dollar being overbought, bonds being oversold. I think it's just, I think this has nothing to do with anything political. Politics.
It's just
nothing.
But do you think it has anything to do with this fear of inflation and
no. This is what they've been calling for decades or centuries a dead cat bounce, and we needed a dead cat bounce here. So this is nothing more than that. Don't let's not get any.
This is not a turning point in expectations for inflation or growth.
Well, I hope it's a turning point. I don't care about the macro story. I hope it's a turning point for bonds and prices, but just to get them back to some level of normal so we can stop choking on them. But I think that the traders all over, whether you're a commodity trader or I'm sorry, a prop trader trading futures, or you're a retail investor, I think the world's long bonds here, and and I think that just getting a little break, getting a little upside movement in there, getting a little break from the pain of just choking on these things, every
for sure, but I get why for me, because I've been choking along with everyone else.
Yeah.
The question is, do you believe the 2-day rally, because it's not just today, like that this price action is notably different than recent history or even intermediate history? And is that meaningful?
Let's see if we can get a couple of going here.
For you.
Yeah.
Who knows? Right now, who knows?
So we got so much stuff going on, Dylan, and you're back in the U.S. And
I'm here in New York. I'm working. I'm in the office every day like a working man.
Oh, took you 40 years.
It won't last. Don't get used to it.
And you can't go to L.A. anymore.
You can't even. It's a different topic. It's a recovery. He's gonna build Trump land out there. That guy.
I don't know what they're going to build.
30 years from now, there's going to be Trumpville.
I don't know what they're going to build.
Be the Palisades. Anyway, it's incomprehensible. That to me is actually more stunning than I guess a nuclear weapon. I think it's actually more meaningful than I think it's meaningful in a different way. I won't say more meaningful, but I think it's meaningful at a level that's different, but it has different aspects to September 11th for people in Los Angeles.
Oh, yeah, no question. Not as.
But in September 11th, we didn't lose our houses. We didn't wake up on Wednesday morning and nobody had a house.
No, but you lost 3,000 lives. I'm
not saying that 9/11 wasn't the most traumatic.
Yeah.
I'm saying suddenly taking away 10,000 units of housing from Chicago, from LA, in a night, which you can't even imagine. If I said to you as an engineer, I said, Tom, listen, I need you to take down 10,000 houses. You'd say, I don't think I could possibly do that. Like even with bombs, I couldn't take every house.
No, but an act of God versus an act of terrorism is very different. I think the shocking thing.
Agreed, totally agree. But I'm saying, as somebody who lived in New York now and has friends and family in Los Angeles now, there's a shared trauma of everybody losing their house and their school and their grocery store. Like that's a very specific and challenging life experience.
I think it is traumatizing for everybody out there. I mean, obviously, my son lives less than a mile from, the center of all this. He lives right in the middle of Santa Monica, and which is literally like
it's the next door over.
It's the next town over, and I think I've done that Pacific Coast Highway drive, from Los Angeles to from Los Angeles down to Malibu, 25 or 30 times. And it's unfathomable to think that there's nothing there anymore. And the idea that there's no way that in 2024 you're thinking that's even possible. Not even.
I don't even. That's my whole point. When I saw the coverage from all of what we all have seen, but I didn't know that was mechanical. If I hired the best mechanical engineers and I said, you got to drop 10,000 houses, basically very few people can die, which is also almost impossible, by the way.
Yeah.
They're lucky. We're so lucky that these fires started at 10 a.m. and not 10 p.m. on that first day.
Yeah.
It gave everybody all day to clear out of there. Thank God. Honestly.
Yeah.
The
whole thing is mind blowing. It's unbelievable. And, I have a lot of personal stories, and I'm sure everybody does, because it's such, LA's a huge city. Everybody's got family and friends and everybody around there. It's crazy.
And Altadena and Eaton and so it's a stack of areas. It's not one area.
Yeah.
All over the city.
Yeah. Yeah. Crazy. Anyway.
Does it matter because we don't want to spend? Does it matter outside of the social consequence, which I think is massive? I guess this is a question I was asking myself, and my argument was that maybe it forces climate pricing into the insurance prices across the board, and maybe it forces real estate prices down as insurance gets priced up.
The only thing that I think
because of the catastrophic sort of obviousness.
The only thing I'll say about insurance going forward is that I do not know how. So I would not trust the insurance companies to price any of this in the future, because they're going to be very emotional, and it's not their models are going to. And I'm not saying that this is wrong, but every single model that they use is going to be in 2, 3, and 4 standard deviation mode. They're not going to be able to give a normal quote into perpetuity. It's never going to happen again in LA. So which
then lays on the entire real estate of one of the most valuable real estate pools on earth.
Agreed. So I actually have a solution. I don't know.
What would it be? Because 70% of those places are not insured. I mean, it's part of the catastrophe. It's not just the structure of the insurance. Property and casualty insurance structure is the one thing that may get changed permanently from the LA fires, in my opinion.
So the way you solve this, and I'm not, again, I don't have all
What's the mass solution, though? You're Mr. Trader. What's the deal?
Yes. So the mass solution is a trade. And the mass solution to the entire insurance issue in LA is that you make it exchange based. So in other words, if Dylan Radigan or
and you're saying the diligence is who does the diligence on the risk calculation?
You don't need efficient markets don't require due diligence.
So you just go to Kalshi and you say insure Dylan's house.
No, you're not going to Kalshi. Forget Kalshi. This is an exchange based marketplace for a home. So for example, you have a piece of property, you want to build back your home, okay, on Malibu. It's a $20 million house, just as an example. You want to get some insurance. So, and of course, you cannot go to an insurance company anymore because either nobody
State Farm State Farm left last summer. Let's live in reality.
Yeah, it doesn't matter. It doesn't matter. Every single.
I'm not blaming them. I'm just saying they were regulated. The whole thing, there was price caps. They couldn't price the risk. It was out of control. It's like the end of government. Are you kidding me?
Totally. So in other words, you're talking about one of the most expensive pieces of real estate in the world, right along the Pacific Ocean, literally on the Pacific Ocean.
Literally.
And you're talking about nobody's going to write that policy because nobody realized that fire could cross a highway and all this crap onto a beach. Just
fire hurricane. It's a new thing, man. It's crazy.
Okay. Well, it could be an earthquake. Who knows what's going to be next time? So what happens?
We've never seen I never even thought of a fire hurricane.
So what happens is we put everything on an exchange. And essentially what happens is then there's a two-sided market. So Dylan Radigan, you built a house to $20 million. You want to get insurance. You want to see how much insurance you want to buy. The other side of that marketplace is anybody. The insurance company could be the clearinghouse, but for example, I can write your insurance because I'm willing to write a portion of that. I'm not saying I'm going to do 20 million, but maybe.
So let's now come back to the customer side, because ultimately you're going to. So what's the price if I go right now? I can't get anything, or it's a cost 10 times what it used to cost.
Okay, so let's say
what happens? What is it on the exchange now? I got the same house. I don't.
So exactly. So what
am I looking at over at Sosnoff Insurance Brokers?
Well, it's not Sosnoff Insurance Brokers. It's still being cleared through State Farm or somebody.
Okay, you're just a buyer. We're all just in there nibbling.
I'm just writing the policy.
You're a nibbler.
Basically, what happens is I collateralize. Let's say I want to do $1 million. Just as an example.
That's right.
I collateralize. I take $1 million of risk on your house as personally, and for
5 years or 20 years or some time window.
It could be minimum, let's say 3 to 5 years, maximum 20 years, whatever it is, and the rate I get is whatever the marketplace is.
I understand your logic.
So my
consumer result.
So for me, I would be willing to write $1 million policy for 5 years. Okay, yep. If you're going to pay me, let's say 60% a year, done.
And now let's say I go to State Farm.
Well, let's say it's 30%. I'll do it for 30%.
My point is the price better in your model than it is in the current market?
It's probably a fraction of it. It's probably half.
Do you think it's 80% better?
No, it's probably half. But I will write it.
Half better.
It's at least half better. I will write this insurance at some multiple of risk-free.
But let's say it's half better, which still represents a double of rates across the most valuable pool of real estate on earth.
Exactly. So I'm willing to write this policy for you. And let's say risk-free rates are 5% right now. I'm willing to probably I'll write $1 million. I'll take $1 million of risk for 5 years for 30% a year, 35% a year. No problem. I'll do that. I'll probably do it for significantly less than that, but I'll do that all day long.
Well, all right.
But I'm just giving you an example. Because they're going to be at rates.
And I think that the point is are the fires relevant beyond their regional trauma, which is obvious. And the answer is maybe there's reform in the insurance markets, which would be a success story for everybody.
They're going to need to raise capital, and it's going to trade at a ridiculous multiple because they're going to have to write policies. It's going to trade at a ridiculous multiple. It's the same thing that happened after the hurricane in multiple times in Louisiana and also in Florida, when insurance companies went out and raised capital at like 3, 4, 5 times risk-free rates just to write policies in areas where nobody would write the policy. Except we should put it on an exchange. We should make it into a two-sided market. I don't care if it's just for accredited investors, whatever you want to do. Just you can't do $2,000 type thing, and you put it out there and you let people bring the market down, because you'll find out exactly what the marketplace is.
And how quick could that be stood up? Could that be stood up this week if somebody wanted to?
No, but it could be
Ken Griffin, the SIBO, you. If you wanted to do it by Friday.
Just think about this. Ken Griffin would write this in a heartbeat. I mean, he'll buy a bankrupt company. He'll do the deal like in GameStop, to fund some bankrupt hedge fund. For sure, he's going to write.
Right, but let's say California is like ready to start cleanup on Friday.
I would think that this.
Can you get a policy on a week from, on Monday?
I would think if you're a hedge fund, if you're a private equity fund, if you're venture capital, if you're a prop trading firm, or if you're a trader anywhere and you understand how the math works here, it's no different than clearing somebody, than writing another trade. I mean, obviously there's outlier risk. A fire like that, an act of God, is outlier risk. I would write that policy. I would put money up for that in 2 seconds, because it's just a good risk reward. If you give me the right number.
But do you think the mechanics exist where like that could be offered in a week?
No, but it can be offered very quickly. I don't know if it's
within a month, regulatory.
Yeah, sure. I don't know about regulatorily, but
technically within a month, regulatory.
Oh my God. Well, the models are already there, so it's not even, the matching.
Most of the time is regulatory, legal, and like permits.
But that's how you do it. The answer is that's how you do it. They could probably raise a few $100 billion in a matter of in basically overnight, and they get the market down to where it's absolutely perfect. Now, the insurance companies might hate that because it takes away all their edge.
Well, it'd be an unregulated insurance product, so it would have all these barriers on the permit side, because it would go in with the real estate brokers as unregulated, and they would badmouth it. I mean, I'm saying that's their risk anyway, as they remember their big thing is that no matter what, insurance rates are going up and real estate values are coming under new forces, both up and down, actually, depending on the situation. But the real estate situation is going to be permanently different. And the question is the insurance situation for all housing, not just LA, but Chicago, Miami flood, New York flood.
Just think about what this would do.
Milan, ice storm in Milan takes down all the trees. It's crazy. I mean, everywhere.
The reason insurance companies would hate this is because this is going to destroy, as much as they complain, this is where they get all their edge in times of panic and acts of God and things like that. This is when they are able to, basically gouge customers and raise rates to ridiculous levels, because statistically the chances of this happening again in LA are, slim to none. They're a fraction of 1%. It's like a 100, it's a 100 standard deviation move. It's not going to happen for 100 years, but they're going to get to milk this thing for hundreds of billions of dollars. But then all of this,
but not just in LA, they could also do it in New York, Long Island, South Florida.
Sure,
I can bump numbers all over town.
But while we're on this topic, another topic that is highly correlated to this is who you basically burnt LA to the ground. Who's gonna fix this? Where are you going to get the people from? If you close off the borders and you shut down everything, who's cleaning up this mess? Who's rebuilding all this stuff? Where are these people coming from?
They're the same people. So here's the interesting. So I'm going to answer your question.
Please.
I can solve this.
Please.
So I have a huge number of people that worked as staff in a lot of these houses, basically the huge gardening, cleaning, and family support services. One of the biggest employers in the world per square foot, I would bet, because big houses out west where people are living the so-called good life.
So your nanny's going to rebuild your house?
No, but your gardener is.
Your gardener's going to rebuild your house.
Your gardener.
Godspeed, Mr. Radigan. Godspeed. Okay, because that is not going to happen. All right. It doesn't work like this. All right. It does not work like this. All right. So you better rethink.
So if I show up in a place with a team of gardeners, you're not going to sign off the deal? You're not going to send the wire transfer?
No.
You're not going to ratify that deal?
No. Now, I know it's going to take a long time for...
If it's Radigan and a bunch of gardeners at your house in California, you're like, we'll see you never.
I only know one person. I have one friend from Chicago who was an entrepreneur, very successful, who built a house in Malibu. And he told me that it took 7.5 years. And this guy's not a bullshitter. He's a straight shooter. He said it took 7.5 years to get his permits, and he's not even done yet.
No, everybody, but they're going to change that for this.
I understand that. But my point is, nothing in LA. I'm invested in a business in LA. So are you. And it took us 2.5 years to build one stinking little office. 2.5 years to get the permits. So
you can get permit reform in California. You can get insurance reform in California.
Okay.
I mean, these are pro-California. I would say this is an opportunity to improve the situation. I mean, now, you could certainly get better insurance markets and a better permit process.
Who's going to do all the build? Who's going to build everything?
The question is whether you trust my team of gardeners.
I don't.
And that is where you and I have an issue. But I think that there are people. I think that there's people to do the job. But that's it. I understand that can be a point of concern. But because so you're saying that the most influential people, everybody leaves.
Well,
right.
They have
the first
same
10 or
problem.
15% of the room is gone to New York or Florida or Colorado or
on a
Europe.
fractional basis, they're having the same problem in Florida right now. Since the last hurricane, half these condos haven't even been rebuilt yet because people are still waiting for permits. This is over a year ago. They're waiting for permits and they can't get contractors. So it exists right now in Florida, and LA is just going to be, the level.
It's going to take 20 years.
Yeah. The level of destruction.
We won't see it again in our lifetime.
No.
You could be in your 90s. You'd be like, I just finished L.A., Uncle Tom.
Yeah,
Captain
exactly.
Tom.
No, exactly.
You'll be like, glad to hear it.
But
what are the Blues doing?
Oh, they're up 100 today. There's no problem there. But we just have to, I think we're going to have to take a really hard look, and this is.
Do you think Trump Elon on Monday is good for that, for insurance reform and permit reform in a way that's constructive or destructive or irrelevant?
I don't know if Trump is capable of understanding the situation, understanding what's going to be needed in California to address both the cleanup and the rebuild. I don't think we have the talent to do it here, in whatever time period we need to do it. They're going to have to bring people in from all over, and I'm not sure how that's going to happen. But this is going to have to be a global effort. It's not just going to happen from Mexico or Central America or South America. It's going to be people from all over the world that are going to be needed to come in, and skilled people, and rebuild LA.
And how do you think the deportation police and that agenda fits with the demand for
You're asking
home building?
Impossible. It's an impossible question. I have no idea. I hope it's not a scene. I hope they don't politicize. I hope they don't make this political.
Do you think it changes the price of your insurance policy or my insurance policy in New York or Chicago?
Yes.
Or in
fact,
Italy, or?
I can tell you that last summer I changed homeowners insurance, and I didn't realize it was almost impossible to get homeowners insurance in Chicago. And we don't have any of that stuff. We don't have
no fire, hurricane, no earthquake.
We don't have fires. We don't have hurricanes. We don't have earthquakes. And it was almost impossible to get homeowners insurance in Chicago. I can only imagine what it's like in Florida, Louisiana, LA. New
York, Long Island.
Yeah. Anywhere, any coastal city, South Carolina,
Houston,
North.
Forget it.
Yeah. I don't know, yeah, it's insane. And I'm talking about Chicago. And so, which again.
So does that mean anything other than be a thing that exists that could be improved with an exchange? Does it mean something there, which is good? And then does it mean something to real estate or permits? I guess that's the question. That'll be what'll get.
I don't know what all this does to real estate in LA. My guess is, from what I've heard, the rental market will be super tight because you have so many people displaced.
Like Katrina made prices go up in New Orleans.
Oh, yeah. I would assume
destroy inventory.
Yeah, I would assume in LA it's the same situation. It will destroy inventory and rental prices will go up. But I also think it will hurt their tax base because, obviously that's probably outside of Beverly Hills and Brentwood, that's probably the single biggest. Yeah, that's as good as it gets. Pacific Palisades and Malibu are, some of the
biggest fish in a barrel. You can do more in a weekend than you could going to 20 states.
Yeah. That's just a massive tax base there. So I don't know. I have no idea I don't know what they do.
So what did you want to talk about today beyond these fires, which I don't think was your intention, and I don't want to dwell too much on it.
It was not. You completely.
I'm sorry.
You completely sidetracked.
I didn't mean to hijack us with fire talk. But I do think it's at least it yields a positive idea, which is an insurance exchange will help the people of California, and they need help, and so that's a way we can do something to help them. Which is
anytime that you can turn a inefficient market into an efficient market, you will help the consumer. Mm-hmm. And, ultimately, that can help the consumer in many ways. It can go much beyond just homeowners insurance. Pushing any kind of a marketplace onto an exchange, helps the consumer. So let's just fingers crossed and hope that that's one of the positives.
We'll see something good we can do here. Anyway, what's on your mind? What's on your mind?
So what we originally we're going to talk about today, and we're clearly off topic, but there's so much stuff going on, just happening right now. And what I'm probably most fascinated about is this whole everything that's happening in the social media space. And not necessarily like social media as it relates to Facebook or Twitter. I don't really care about Elon Musk and his securities investigation. I don't really care about, Zuckerberg and his 180 or any of that kind of crap. What I do care about is the consolidation, the idea that the consolidation of social media into the hands of, we used to always have we always had different kinds of wealth disparity. We had, there was a lower class, a middle class, kind of an upper class, but even the richest of the upper class there was some, they had boundaries a little bit, even the Rockefellers had boundaries. Okay.
That's the title of your book. You're going to put that they're going to put that's your legacy. Even the Rockefellers had boundaries. Yeah. Anyway, go on. I'm going to play along. Go ahead.
Only because we were having a Nelson Rockefeller discussion.
That's fine. Even the Rockefeller. So the point is, there's that the natural excess of wealth is now more excessive than ever. Maybe because the digital reality allows a level of power and influence and excessiveness that wasn't available to Mr. Rockefeller.
And I'm not suggesting for 1 second that anybody that has a few $100 billion, a few $100 billion didn't deserve it, because there's no real passing down a few $100 billion of wealth. I mean, that's never really happened yet. The Warren Buffetts of the world are still alive. And so that hasn't happened. So the people that have 100, 200, 300 billion dollars, which is, a handful, a couple dozen people, whatever, have some ridiculous amount of money, they've earned it. And so I don't take any of that away from them. They've earned it. They built those companies up from scratch. I don't think any of those people came from any money. Okay? They built it up. Whether it's Jeff Bezos.
Okay. Move on. We got it.
Fine. So, but the numbers that they've gotten to now are bigger than the GDP of many countries. We have 180 countries. I think the GDP of like 100 of those companies is less than the wealth of certain individuals. My point is that an individual now, we used to look at individuals as, oh, you know what, it's just an individual. But now we have to look at individuals and say, you know what, maybe there's more to this than should a single person have access to that much control, to that much data. Is that even realistic anymore? And so when they talk about, okay, something has to happen with TikTok. It's the wrong decision, but something has to happen with TikTok. As you know, I'm a huge fan, and I think it's ridiculous. But they voted on it. It is what it is, and something has to happen with TikTok. Is it okay that someone like Elon Musk gets to bid on TikTok? Maybe it was Zuckerberg. Maybe it's Bezos. I don't know who it is. I don't really care who it is. But anybody like that, is everything that was wrong with TikTok being owned mostly by, a bunch of American hedge funds? I mean, the three biggest shareholders of TikTok are Susquehanna, General Atlantic, and BlackRock. That's your three biggest shareholders. Okay? So, so whether you're talking about Larry Fink or Jeff Yaz, or whoever it is, those are your biggest shareholders.
It's okay.
Fine, I don't care. I'm not really.
But no, but so can I answer your question? I think I understand your question, which I think is you're speaking to concentration of power, excessive power, absolute power.
Sure.
Through financial resources, communication resources, political resources, whatever it may be.
Okay.
And you're saying, is it safe to have such consolidations of power? Right, which is sort of goes back to, it's an age-old political question, right? Trust busters, Rockefeller, et cetera. And like, so what I'm thinking as I listen to you is, should you run an antitrust legislation, not for financial, like basically, is it an antitrust violation? Is trust busting the domain not just of controlling railroads or controlling oil supplies, but controlling flow of information? It's a valid philosophical debate.
Yeah, it is.
I would say yes. I would put it under the Sherman Antitrust Act of 1933. Spin up a lawyer and go with some trust busting. But that's a philosophy. But again, that's the drones, right? I mean, the whole thing. There's a regime of digital legislation that's long overdue and is only going to become more critical. We'll get AI to draft digital legislation that includes that.
Okay.
Updated antitrust law. So of course, yes, the answer is no. I would say of course, one, you'd use antitrust. It's not safe. It's not good. No, one, and it's a joke. Jeff Yaz, whatever, not his fault, but whatever.
No, not their fault. But
AI is going to have this information. Is my point. Forget Elon Musk or forget whoever. Artificial intelligence with agents will have access to more data than Elon Musk.
Do you think it's just a strange coincidence, or how come nobody's brought this up? But the three of the largest donors to Trump, I mean, Elon Musk, Jeff Yaz, and the co-founder of BlackRock.
Now you're going conspiracy?
I'm not going conspiracy. I'm just giving
you're going
facts.
Somewhere.
I'm giving you facts. Okay. When you want to talk about the biggest donors, okay, to the entire campaign were Jeff Yaz, Elon Musk, and I just forgot the guy's name off the top of my head, but Larry Fink's partner, the co-founder of
BlackRock. And so, and you're saying those three entities or institutions have a relationship with TikTok, which is to be the largest.
No, they don't have a relationship. They are the largest shareholders.
Factually so.
Factually so. And they all...
Elon Musk is a shareholder of TikTok.
No, not Elon. The other two.
BlackRock is a shareholder of TikTok, and Susquehanna is a shareholder.
I don't know if it's...
Or like Jeff Yaz holding
it.
Jeff.
And DA is the other one, which is a private...
Complete your conspiracy. This is now intriguing.
I don't have a conspiracy. I'm just bringing up...
You got some conspiracy.
You're saying... I'm asking you if an administration can objectively look at this situation as it's an antitrust, as there's antitrust risk, when your biggest contributors are also the largest shareholders are also the ones who are going to be fighting out for ownership, or possibly. Like, all we're doing is
I would say it's highly unlikely.
Because Elon Musk never said, I'm trying to buy TikTok. I mean, it's just, there was an article.
But it's just it's called a natural buyer in the industry.
Well, there was just a Bloomberg article that really named an anonymous source.
But why not? Who better?
Right. Who better? He probably loves the story.
Yeah. He probably planted the story.
Probably.
He probably does like the Donald Trump thing where you have a different identity and call the reporters. He's like, there's all those recordings of Donald Trump calling the New York reporters, being like, oh, this is Bob Johnson or whatever. He had some other name. And he'd start rumors about himself.
Hey, it's good PR, I guess.
That's old school.
Yeah. And I don't necessarily have, I mean, I have ethical issues. That's not what I'm. That's
charming.
Not where I'm going with this thing.
But what about AI becoming the data master, the key master to all of it? Whatever's available to Peter Thiel or available to Elon Musk or available to David Sachs becomes available to AI.
Which means it's available to Dylan Ratigan.
Which means it's available to an AI agent I've never met who's 10 times smarter than me and never sleeps. Who's in charge of the whole racket.
Yeah, I'm not, at this point, I don't think AI is part of this equation, although the AI behind TikTok is just the best I've ever seen.
Yeah, but maybe the AI strategy to take over is you're going to like AI better than people.
Well, if AI was so good, if TikTok AI was so good, which I think it's the best, like I said, the best I've ever seen, they wouldn't be in this predicament because they would have figured it out.
They would have been ahead of this.
They would have been ahead of it.
They could program their way around it.
My fear is, like, what I don't understand where everybody's coming from is like, okay, so on the one hand, you got China, which will be replaced by something else or some, I don't even know if it's China or somebody there, whatever. The company's Singaporean. Or would you want Elon Musk having all your information? I'm already upset that he has all my information from my Tesla.
And I'm saying everybody's got all the total information is the future. That's 2025. The thing about Elon Musk or the theoretical Chinese is that we assign to them an ability to exploit the data to their advantage in a way that we feel we can't, which is probably true. That's why you're like, I don't want the one person to have all the data. It's just somebody who has the ability to use the data to do whatever they want. But at the same time, the more I know Tom Sosnoff, the happier you become because your TikTok is perfect. Everything you like. And all the things you like the best.
For another week.
I'm just saying, like, there's a version where the algorithm or the Tesla robots or whatever, that the future takes over not by a hostile takeover, but through, like, kill them with kindness. And you willingly forfeit to the robots because they make it better. Pick my movies, pick my food, you know. I guess my point is, I think that the final frontier of these rich robber barons, of Elon Musk being sort of a symbolic, is the next we quickly go to the digital robber baron we've never met. This is you want to go full crazy. I think we got a situation brewing.
Which is?
AI oligarchs.
Oh my God. You know, I worry less about efficiency than anybody else. To me, AI it just makes everything more efficient, and I don't worry about like that because I'm a
you know why? So you don't worry about the agent, like the AI as AI takes on agency, to organize teams of 100, like a digital agency. It could organize 100 employees, graphics and data and all the things that an agency does.
Yeah. So
and mobilize a campaign.
Now you're the conspiracy guy. I'm not.
You're the one that opened the BlackRock backdoor deal.
I look at AI as a machine to make things incredibly, as a technology that will make things incredibly efficient. By the time AI is organizing an agency, as you talk about, it'll be a decade from now, and you'll have quantum computing that will come in and disrupt AI. So you're like, you can never get ahead of all this stuff. Like, you know, that's why I can't. That's why
it's going to happen by Tuesday. You got a week. You're almost there.
I know. And drones were going to take over and everything else, but we're still here. And we're still. Hey, I'm still picking my own.
Are we still here?
Yeah. Okay.
They blew through the Palisades in Altadena like it was nothing.
That would have happened 100,000 years ago. That would happen 10,000 years ago. Just like
fire hurricane.
So before you guys get all crazy, all this technology that's gonna disrupt and ruin and do whatever, it doesn't ever really do any of that because we're still here, and all it does is just add efficiency, which efficiency is supposed to help us.
So you're suggesting that there's just a Dr. Evil then? You're not worried about AI, you're worried about Elon Musk with megadata or an anonymous Chinese person, whatever, any supervillain. It could be it's a Bond movie.
I'm not worried about an anonymous Chinese person. I'm worried about, an Elon supervillain. Yes.
Okay. And what do you imagine? Let's assume Elon is a supervillain who has all the data.
Yeah.
What can he do to our lives? How does that harm us?
He can take away my food reviews in cars and totally mess me up because that's what I like about TikTok.
But what if he gives you more of what you like?
But I don't think he will.
So you just don't want. But is it? So what is it? But like, let's say you okay. What if I put Scott in charge, who's your old buddy? You built these companies with him. Do you trust him more?
Sure.
Elon, it's personal. You don't want Elon touching your stuff.
Yeah, I don't want him touching my stuff. I don't want anybody touching my stuff.
But if Scott was in there, so you want a random Chinese person?
I want a random Chinese algorithm.
Okay.
Yes. They're way better at algos than the U.S. is.
Than Elon Musk's madness.
Than Zuckerberg's madness. They're way
Zuckerberg's
better.
madness.
The algos on Instagram stink compared to the algos on TikTok. The algos on Twitter and the algos on Facebook are horrible compared to TikTok.
And you say that's a compliment to the anonymous Chinaman.
I don't know who does it. I'm not sure if they're not. I don't know if that's not a group in MIT or Stanford who's just in a classroom messing
Well, it has
around.
nothing to do with a point of origin. It's just a function of anonymity.
Yeah. Okay. I'm just making it
there's
up.
been an investment in branding TikTok with a Chinese branding, I think, to make it a more desirable adversary.
Well, I will tell you one thing. I will tell you that
propagandized.
As somebody that owns a small business, TikTok is great. And I think a lot of small businesses are really going to suffer.
So you think they're really going to put TikTok away?
No, I don't think so.
Come on.
No, not a chance.
I heard that TikTok shop is the best thing going on. That social commerce is the future of mankind. People on TikTok shop, apparently. I've never been. I heard that said to me. Hear that?
I can't help you there. I don't know. Anyway, we are out of time. We were all over the place today, from fires in LA to Dr. Evil Elon.
Dr. Evil, supervillain. He's a great supervillain. Playing video games at Mar-a-Lago, apparently, and takes over as the official first buddy on Monday.
Yeah, so you got lots of good stuff. And Monday's going to be one of the great American days. We got the inauguration. We've got the national championship game Monday night. And it's a holiday.
I mean, because it's a good day to watch TV.
We got last call between those two, just so you know.
Really?
Yeah.
Really? So we got even a plug-in. So we're going to go Monday after the inauguration and before the game.
That's right.
Last call.
You can watch me and Victor Jones.
That's some brilliant programming.
It wasn't intentional. I'm Tom Sosnoff. He's Dylan Radigan. And thanks for spending. That was a fun discussion today, Dylan. Thanks for spending some time with us. We'll see you next Wednesday.
You can promote overtime. I got overtime every afternoon, 4:00 with Chris and Ilya. If we're going to promote last call,
There you go.
Promote overtime.
There you go.
All right.
Check out Dylan, Chris, and Ilya this afternoon. Not today. Oh, yeah, today.
I think we will today. Why not?
Yeah, it's only Wednesday. All right, guys, take care. Thanks.
All right, bye.
Just a bit outside. It is Thursday, January 16th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan also in New York. Maybe we're going to have dinner tomorrow night. The market goes nowhere today, just a bit outside of what it did yesterday. That's a reference to Bob Uecker, rest in peace. We see here that this S&P is down by 0.25%, the NASDAQ off by 0.75%, the Dow Jones off by 0.25%, and the Russell up by 0.08 on a day where, quite frankly, not a lot happens. Retail sales disappoint slightly. Jobless claims a little bit weaker than anticipated. So we do have a phenomenon where yields come off, oil is off, and stocks can't make hay of it. What does that mean? We'll talk about that and more here over the next hour as we wrap up the futures trading day. If you're on the platform or on the website, come over to YouTube, tell us what you're trading. If you're already on YouTube, come back over to tastylive.com, see what we're all about. Guys, I'll start with you, Ilya. You mentioned the insight that this is a market that really didn't do anything today, despite having some favorable tailwinds, perhaps. You know that my working thesis has been that oil and yields have been a problem. So a day like today should have been good news for stocks, and yet it was not. As our resident bear in chief, what does that tell you, sir?
I am quite encouraged by the price action today. I mean, obviously, yesterday, CPI went the way of relief. It was a modest relief. But if you look at the internals of those numbers, we had core disinflation, which is exactly what the Fed wants to see, and the higher number at the headline, that 2.9 number, which, by the way, was as expected. It wasn't higher than expected, but that increase from 2.7 to 2.9 was all energy for the most part. So there was indeed something to be a bit relieved about in those numbers. They didn't scream at the Fed that they need to abandon rate cuts altogether, which of course would be a much bigger head change than just scaling things down by a cut here and there. That would amount to a whole sea change, and the Fed is not seemingly in that mood. What we saw today should have encouraged markets further. Retail sales was not horrible, but a little bit softer. Nothing to be concerned about. The year-on-year numbers well on course. And you got a pullback in oil that essentially gave away all of yesterday's rally already within hours of the futures day reopening in Asia yesterday. So that seems to suggest that that rally was a head fake and a false breakout. Because by the time you looked at oil come Asia open yesterday, it already gapped down and erased all of its spiky gains in that session. Again, to your point, should be supportive for those people concerned that the economy is reflating and the Fed is not going to give them enough cheap money, as we've seen them be. They were reactive to strong NFP. They were reactive to strong ISM. They were reactive to the U of M numbers that had a higher one-year inflation outlook. We saw their reaction to PPI. It was modest, but it was in the same dynamic. PPI was a little bit softer. Market liked it. And today they can't make hay of any of it. And yields are actually coming in. So the thing that they're supposed to be happy about, it's occurring. Yields are lower today. More rate cuts are being baked in again. Mm-hmm. And stocks can't do anything with that, which is concerning if you're long and encouraging if you're short.
Dylan, is this just a too bearish interpretation of what was a good day yesterday, digestion today? What are we not seeing here? Or should we be worried that there's no follow-through to the upside?
For me, just I really think you've gone from a lot of action since, let's say the week before the presidential election through today, with a lot of new information and a lot of adjusting of expectations and all the rest of it. And I really think you now, as of today, and I think today is as much it's setting a level for next week. That basically you're in a holiday market that's now ended on a little rally the last couple of days in the most extreme assets, and a little give back on the upside with something like oil. The most interesting thing is does that Apple move, and will the broader tech names that are not only the market's leadership, but also perceived to be the most important part of the oligarchy in America in terms of access and influence on this specific government? David Sachs, that's not just Elon. They have a whole network of folks around this particular administration. And if big tech can't benefit from the Trump administration, then no one will, I would think.
Big tech was the best performing asset class 3 out of the 4 years, information technology, right, during the Trump first term here. You mentioned Apple, which looks really bad. The Apple's falling off the tree here. The uptrend 4%. From the April, November swing lows here, that really defined last year's move. It's given up the goose quickly in recent weeks. And today we're closing at a fresh yearly low, 228.26. We come into the year closer to 250. So it hasn't been a good year for Apple. Is this just all tariffs? We heard from Scott Besson today, Ilya. He was at his confirmation hearing on Capitol Hill. He was speaking about the need for the Trump, the TCJA. I call them the Trump tax cuts, but it's the Tax Cuts Jobs Act. That looks to be extended. But he speaks of the tariffs very favorably and that they are coming. A company like Apple, who derives a lot of business activity from China, would seemingly be at risk, no?
I heard an interesting take, and this wasn't regarding the conversation that Besant was having. It was in response to the confirmation hearing for Pam Bondi, the nominee for AG. And there was an interesting conversation, I apologize in advance. I forget who the expert was that CNN had on to talk about it, but the commentary was from she was a former judge that's had to go through a similar sort of thing, and what she was saying, and indeed what friend of the show Ari Melber was saying as well, was that in these things, when you think you have the votes, when you think you're going to get confirmation, job number one is not to upset the apple cart. It isn't to say things that might lose you the votes that you think you have. We know that the tariffs are a contentious issue in MAGA land because we know that there are two camps on it, as there are most of the policies that we've been discussing here. It's the same thing with immigration. It's the same thing with a whole host of things. We just saw a clashing of those two sides about visas. So if Bessent wanted to make sure that he's in a position to do what Bessent thinks is right, he's probably not going to try to rock the boat here. He's going to try to say that thing which doesn't upset any of the people that might vote for the nomination that he thinks he already has in the bag. So he's going to be vague, and he's going to toe the president's line in spirit and in general. And I don't think anybody thought that Bessent was anti-tariff. The question isn't that. It's, are the tariffs a negotiating tactic, or are they a goal unto themselves? And I don't think he answered that question from what I saw, and that, I think, was the goal, to say nothing on that very critical distinction, and thereby to just get in there. Audio.
Doesn't that tell you that
And
they're
it's
being
back.
used as a negotiating tool, though? Right? Like, if you're not committing to them, but also, how do you play that? I kind of think about, like,
Well, you have to kind of say that you're serious, right? Because then how do you negotiate? If people don't think you're going to do it, if you come out there and you go, hey, I'm going to threaten you with tariffs, you have to be scared, but don't worry, I'm not actually going to do it. Well, are you scared? No.
Yeah, you can't just make the empty threat. You're going to have to deliver on it, and you can't say you're bluffing. So,
at the very least, you have to look like you're serious.
Dylan, I'm not sure if you heard anything about from the Bessent confirmation hearing today, but he was going on about, deficits and government debts and right now. But, from the Doge Commission, as Elon Musk was, quoted as saying in the New York Post this week, that they're probably not going to be able to find the $2 trillion in cuts over the next decade. We're talking about more trimming the fat around the edges. And that, for all of our quips about Elon Musk, I think we've been very clear-eyed about what this Doge Commission can and can't do, having no statutory spending authority. But realistically, how is the U.S. government, what is the pain threshold right now in Washington, in your experience, for actually making the substantive budgetary changes that someone like Bessent was talking about today during his confirmation hearings? Do you think we're going into an era of austerity?
Non-existent. Non-existent, because taxes has no relationship with government. The United States uniquely exists as the only economy on earth where the tax base is completely and absolutely detached from the spending thresholds and budget and actual spending of the government. And as a result, the tax base and budgeting process is a fabricated political prop that is used to posture some version of moral preference to conservatism or liberalism, however it may be projected, and is profoundly immaterial to the actual functioning of the spending apparatus of the government, as was proven in 2008 and 9, and as was proven again in 2020, and basically just was whispered about with Silicon Valley Bank. And so the frustration with the whole anybody who comes and talks about discipline is really more about expressing a social preference in terms of how they want to be seen. And I think it makes sense that a Republican Treasury Secretary wants to be seen as budget prudent. And the Doge Commission is like having a pro-puppy commission. Like, everybody is in favor of reduced government waste, fraud, and abuse. 100% of the people. And so properly positioned, Doge is wonderfully appealing for everybody. and a conservative Treasury Secretary yammering about budgets and spending is great political material. But the fact is the dollar is as strong as the dollar is beastly strong. Inflation is the obvious sort of relief valve, if you will, of the entire money printing apparatus. And the real interesting thing is any presidential administration is only as good as its bond market and as basic, household inflation, I'll call it, meaning gas prices, rent, home insurance, food, etc. And I think any new administration, particularly this administration, represents a threat to the stability of some of those things. And I think that's why the market's priced the way it is coming in, which is with a lot of wiggle room to be surprised to the upside when inflation isn't that bad. Right? But they basically set the bond up where as you can see, it's come off, which is lovely from a personal standpoint. But the basic idea has been raise rates. Market rates need to be higher, not lower, before this new president. And I don't think that the rhetoric is anything more than a way to satisfy a political base.
Ilya, you mentioned that
policies of reduced spending. Sorry, policies of reduced spending. And I'm sorry, Chris, are almost impossible to get through any legislative process. Full stop.
Particularly in a Congress that's this thin. Ilya, you mentioned that the bonds earlier today did hold up, right? We talk about oil coming off, bonds holding up, but stocks not being able to make hay of it. We don't quite get a close on the high here in ZB. We're at 112 and 28, 29 ticks right now. Talk to me a little bit about this. Do you think that bonds have bottomed here, or are we now at the decision point?
I think, so I started to get long bonds ahead of CPI this week. And the idea was that essentially you've started to cross a kind of line in the sand where the market got out to only pricing in one cut for this year ahead of CPI. Now, in my mind, a Fed that says, I will cut 100 basis points, then says, I will cut 50, that's an adjustment based on economic conditions. Things ebb, they flow, data goes up, data goes down. This is a forecast. They're saying, listen, we gave you a bias. We're cutting. This is where we want to go. This is the trajectory for policy that we think makes sense in the medium term. The Fed doesn't change its mind every month or quarter. It's laid out a cogent case for saying we are in a cutting cycle. Within that cutting cycle, you can make adjustments. When the market is already at 25 basis points, the next adjustment isn't that same kind of adjustment. If you go any more hawkish than a 25 basis point cut, you have no cuts. And no cuts is a different headspace for the Fed. A Fed that is not cutting and then tinkering with the details, but has decided that it is not going to do anything this year, is a